technology, record this. Technology is not my strong suit, so I apologize in advance because I am mediocre. Well, let's see, I need to start the screen show. No, you can do this, everything is in the way. Slideshow, here we go. This is the best part of the presentation, I promise you, is me struggling with tech. Okay, so we're gonna talk about finance, tax, money for freelancers, creatives, artists, designers. I heard this workshop went out to a bunch of dancers as well, because I'm in a book club with the dancers. Said, oh, we're doing a thing. Oh, and first of all, whoever did the design for the poster for this, it's a great poster. I was really impressed with the artwork that was associated with this presentation. It made me feel very special. So if that person that designed this here, thank you, it was great. And thank you to XSpace so much for having me. I love talking to artists as a fellow working artist. I was talking to Natalie and Alexia and Philip earlier about why this isn't taught in schools. I went to theater school at Concordia and we learned how to lie on the floor and breathe for 3 years, but we did not learn how to deal with our taxes when we got out of school. And it's why I do what I do now. So this is a little bit about me. I'm an actor. This is a picture of me on Kim's Convenience, season 3, episode 10, maybe? So Kim's Convenience for a second. I'm also a wildlife rehabber in training. So there's a picture of me with a little pigeon there. I volunteer and sometimes work at the Toronto Wildlife Centre, which is an amazing organization. It's the largest wildlife hospital in Canada. We take in 5,000 to 6,000 animals a year and rehab them and put them back on their feet or their wings. So I've been working at Artbooks since 2009, but I was a client since 1997, I think. So it reveals my age a little bit. I'm like pretty much all the clients that come to me knew, and probably a lot of you. When I started getting out into the world outside of theater school, I didn't really understand tax, but I'd heard rumors that there were things called expenses and that you needed to keep your receipts. And so I would keep my 3 receipts and give them to my mom. And she would take all of my paperwork away. And then a month later, I'd get a letter from some man I'd never met saying, your taxes are done, this is what you owe. And it was a total mystery. And there was never a dialogue, there was never a communication about what my receipts did, if they did anything, what my slips meant, what my schooling meant. There was never a discussion of what was happening with my tax. And it didn't feel right to me to not understand my situation. Not everybody cares about knowing what their taxes are. They don't care about the magic behind the curtain that is tax. But as an artist, you are running your own business. And so understanding some basics of what that is, that magic behind the curtain is really, really important. Because like me, when I got into theater school, I was like, no, I'm an artist. And I'd been going to Artbooks as a client for a while, and they tried to get me to work for them, and they tried to get me to work for them. And I'm like, absolutely not. I don't do math. I don't do math. I'm a high school math dropout. Like I pieced out in the middle of grade 12 and hated math. Not my thing. I refused to believe that it was something that I could do for a living. But then I moved to LA and came back dead broke, and they asked me to work for them again. And I was like, absolutely, I'm dead broke, and realized that math is all being done for me by the computer. And it's just basic algebra, and everybody can do algebra. It's, adding and subtracting and multiplying. So anybody can do what I can do. If I'm a high school math dropout and I've been doing tax for 12 years, anybody can do what I can do. Or the basics of, which is the bookkeeping, which is what we're going to talk about in large part. So what I like about Artbooks and other organizations who do artist taxes, ideally, is that they're telling you what your business is about, why we have expenses, how we deal with our income. What are we going to talk? We're going to talk about grants today, because there's a lot of questions about grants. We'll talk about grants. I think the most important thing we want to think about as artists is having some ownership over our money. As a fellow artist, I am terrified of my money. I'm terrified of the CRA. I'm in the same boat as all of you, but having a bit of ownership over it has changed my life and settled some portion of my financial anxiety. So I work at Artbooks. We're not the only shop in town, but it's where I talk. It's where I work. So I will be talking a little bit about it. As you can see, this is our website, and we try to be very friendly. There's a little picture of our former office dog, Eloise. She died a couple of years ago, but we always have a golden retriever in the office. Currently it's Rosie when we're in the office. And we usually have one of our former staff doing our design work for us. This is a former staff member who's a watercolor artist, did all the beautiful watercolors for our website. We only work with artists, and we also like to hire artists. And as Natalie said earlier, we believe very much that artists should get paid what they're worth, and we fight for that whenever we can. It's really important that artists get paid what they're worth and understand why they're getting paid or why they're not getting paid. So that's just, it's like job number one for us, is for artists to be, what is the word that's not paid? There's another word, I'm having a Zoom fog. Remunerated? That's a fancy word. Either way, they should be financially rewarded for the work that they do. Now, where did my mouse go? Oh, there we go. Okay, so couple of primer basic information that we all need to be really clear about. We're talking about the CRA first. The CRA is the short form for Canada Revenue Agency, and that's the organization that we all come to be afraid of because they mail us letters. They used to mail us letters. They still do. Brown envelopes, little blue corner. They usually want something from us. It feels like they're going to audit us whenever we look at the mail. It's terrifying. But we're going to try to demystify a little bit of what the CRA is about, because at the end of the day, it's a bunch of people that are getting paid to do their job, and their job can be a little bit scary to us, but they are just people. And a lot of them are really, really nice. So we're going to deal firstly with deadlines. A lot of people are probably who are here. How many people do we have here? We have like 50 or so, 56 participants. Probably you already know as a freelancer that your deadline is June 15th, but if you didn't, that is your tax filing deadline. So I'm going to be talking about sole proprietorship for the most part today. We'll talk about a couple of other corporations and partnerships at some point, but for the most part, this is a sole proprietorship discussion, which just basically means I'm a painter and I make art and I have a tax return. It's the most common tax return that we're going to file when we have art practice beyond incorporation or partnerships. It's the most common return. I do it. It's the kind of return that I file. It's just a basic tax return with one extra form that says I have a business. So we file a Canadian personal tax return with an extra form that says I have a business, which we'll talk about in a little bit. But when we have that special form, it's called the T2125. It's a statement of business income and expense. When we have that form, it allows us to file a return after the deadline. Deadline is April 30th, but we get an extra 6 weeks to file a return until June 15th because our taxes are more complicated. I'm sure you all know they're more complicated. There's math involved. So we get an extra 6 weeks to do a bit of bookkeeping. However, the issue with that deadline being June 15th is that you have to pay by April 30th, regardless of when you file. So if you're going to file June 12th to 13th, that's fine if you have freelance business. But if you think you owe, you want to try to send them an estimate of what you think you owe before April 30th. And sending an estimate, sending a guess is fine. It's normal. It's something that we encourage people to do because they charge interest as of May 1st. The CRA charges interest. Right now it's 5%, but it can change quarterly. It used to be 1%, now it's 5%. So we encourage people to send a guesstimate of whatever kind they can by April 30th so that you're not being charged interest. That's best policy. If you overestimate and give them too much, you will get a refund. If you underestimate and send them too little, you would only be paying interest on what you hadn't paid them, the short payment. So if you owed them $500 and we sent them $400, you pay interest on only $100, which is very modest. So we want to encourage people to just know the deadlines and work within them. The biggest way that the CRA can penalize us beyond filing late is by paying late is by filing late. So the CRA dings us for paying late. So April 30th is a deadline for tax and HST, if we're dealing with a normal personal tax return. But also if we file late, they can ding us. And that's also, that penalty starts at 5%, but the more you're late, the more they jack up that penalty. They really want people to file on time. So if you're late 1 year and they charge you 5% of what you owe, that starting on May 1st or June 16th, depending on your deadline. If you file late 1 year, it's 5%. The next year it might be 6%. The year after that, it might be 7%. I think it gets as high as 17% penalty for late filing. So the biggest takeaway I want people to have from this is not file late. It doesn't matter if you can't afford to pay taxes you think you might owe. You should always try to file on time because of that penalty. Because interest is one thing, and it might be unavoidable, but the late filing penalties are avoidable by filing on time. So do your best to file on time no matter what. And obviously life happens and things, something horrible happens in April and just you can't file your taxes, and it happens. And we have clients who come to us every year, and I'm not exaggerating, every year we have at least a couple of clients who need to do 10 years of tax, 10 years or more. Life happens and there's no judgments around not filing your taxes. But once we get people caught up, we sort of really strongly encourage them to keep going. You can get caught up, do your 10 years and then fall off for 10 years, but the best thing to do is get caught up and keep going, because those penalties can be really punitive. And also, if you don't owe money, you're not filing, that's not the worst thing in the world, but you're also leaving money on the table, because there are credits that are introduced regularly that are basically free money that we get when we file. So in the last 3 years in Ontario and a couple of other provinces, but Ontario, I know for sure, I think Ontario, Alberta, Manitoba, there's a credit called the Climate Action Credit, which is, it's free money. You file your taxes, you get the Climate Action Credit. It started at, I think, $140 for an individual. This year it's up to $336 for an individual in Ontario. It's free money. If you file your taxes, you'll get the Climate Action incentive. Historically, it has been something that has been given to you with your tax refund, or it's going to reduce your tax bill. Now they're going to be mailing you checks starting in July. So this year we're going to be getting 2 quarters, $90 a quarter in July, and then we'll get them quarterly. But if you don't file your taxes, you lose that credit. And so that's losing $330, which is not worth it. And that covers the cost of a tax return. There's also the credit in Ontario. There's actually federal credit called the HST credit. It's a credit for people who are lower income, and it averages about $400 a year. It's also delivered quarterly, and that's free money if you file your taxes and you're lower income. So there's places to get some free money if you file your taxes. So I encourage you, no matter what, just to file. You don't think you owe, who cares? File your taxes, get the free money. There's also the Ontario Trillium benefit, which is a provincial credit. That credit is for people, again, who are lower income, who are paying rent or property tax in Ontario. You can take a portion of your rent paid on that credit, and that credit can be up to $700 a year, and that's paid monthly. So we're just talking about, that's like up to $1,700 almost, no, $1,400 almost of free money, depending on your income, that's available to you if you file your taxes. So right there is a really good incentive to get caught up in filing your taxes if you haven't already, knowing that 2 out of those 3 credits are income contingent. So you've got to be on the lower income side, but the climate action incentive is for everybody in Canada. And if you have a spouse, it's higher. And if you have kids, it's even higher. So file your taxes. It's a good thing to do. All right. The scary thing that we don't want to do is communicate with the CRA. And as probably a lot of you learned since 2020, they have something called My Account. My Account is this new online portal that the CRA has been spending a lot of time and money developing. And it's actually a great portal. It's been used since COVID started to help administer your CERB and CRB benefits. Some people went through Service Canada or the phone to get their CERB benefits, but a lot of people use their My Account because My Account is a great thing to have. So to sign up for My Account, you just Google My Account CRA. They have to send you a password, so it's a bit of a slow step to get set up. You need to be current on your taxes to file, because they will want current tax information, like a line number from a prior notice of assessment from them. So you need to be current to file to get it registered with My Account. But once you have it, it's a wealth of information you can have. You can see here, this is just the sort of the entry page. There are 3 different ways to have My Account. Well, 2. There's a personal My Account, which is just finding your tax, and there's a business My Account, my business account, and that is for administering HST. So people oftentimes try to find the HST information that they have in their My Account, and it won't be there. It'll be in your My Business account, because it's 2 separate accounts, but they're tied to your SIN number, and the login is going to be tied to your SIN number. Represent a client or family. You can do that if you, say, have an elderly family member who is unable to claim to take care of their own finances. You can become a representative of your, for me, it was my grandmother's, both of my grandmothers, I was their rep, and I could go into their account on their behalf because they'd authorized me when they had the mental capacity to, but then I'm able to manage their taxes for them. So if you have declining family members, it's not a bad idea to become a representative on file for them with the government so that you can be managing their taxes, getting their slips for them, and organizing their life a little bit that way. So if you haven't signed up for My Account, I encourage you to. It is really, really, really handy. One of the most handy things about My Account that people probably don't know about, or maybe they do, it's not in this screen cap, unfortunately, but, and there's been a lot of chatter, but I see on social media people talking about it, but you can see that there's a right-hand side menu. It says related services, and there's a bunch of different options there. Just outside of the print area that I popped here is a place called uncashed checks. So all of those little benefits I told you about earlier, the free money, the GST credit, the Trillium credit, used to come on paper checks. They still do, people who haven't signed up for direct deposit. But if you have those paper checks coming through and you didn't cash them, they're waiting for you. It's the only organization, at least in Canada, where their checks, the government checks, don't go stale, which means you can't cash them. Government checks will always be available to cash. So if you've missed depositing even like a $30 check, it's sitting there waiting for you. So if you're looking at the related services in your My Account dashboard, and you scroll on down just a little bit further from this view, you'll see a place that says uncashed checks. If you have uncashed checks, there could be a bit of a windfall there for you. I know of a lot of the clients who found hundreds of dollars. So if you haven't, make sure to check your uncashed checks area, because you could find some money there. Also, you can see here, this is the dashboard for My Account, and this is a screen cap of my Account. And I did this a while ago. My tax return had not been received. If it was received, I would have been able to click that link and look at their notice of assessment, where they tell me, hey, we got your taxes, and we agree, your taxes look fine, or we disagree, can you provide more information? So helpful information there. A lot of people email me these days looking for information that's available in My Account. Specifically, if you're trying to buy a home and your mortgage broker needs to see your proof of taxes, this is where you're going to find your notices of assessment, your tax returns. Another great thing you can find in My Account, you can see the very first line item under related services is called tax information slips. And so we get T-slips, we get T4s, T4As, T5s, we get all these kinds of tax slips. They are required by law to be issued. For most T-slips are issued by the end of February. Some of them are by the end of March. So our income T4As have to be issued by the end of February, but T3s and T5s, which are typically investment income, they have an extra month to prepare, so they can come in later. But when you get a copy of a slip, a T4 or a T4A, you should be able to trust that whoever gave you that slip also sent a copy to the government. So I did a day of work for the Toronto Wildlife Center, which I do. They give me a T4, I get a copy. I know that the government also knows that I have a copy of this. They've gotten a copy as well. And it's how the CRA will know if we haven't filed our taxes, is because they could be sitting there with a bunch of forms in your SIN number that have never been allocated to a tax return. So it's how they can come up to us and say, you should be filing your taxes. We know you have money, because they've had a copy of your T4 sitting around waiting for you to file your return and match records. So basically the tax return is matching their records to your records and saying, we both agree that I got this money. So the CRA has a copy of a lot of the slips. It's not a guarantee they're going to have a copy of all slips, because I find that certain smaller organizations might give you a T4A, but it's not send it to the government. It's like a step that they forget. So it's not a guarantee you're going to find everything here or find everything right away. If you were to go into your My Account today and look for T4s, you might be missing some, because they're not due to be filed until they have another 2 weeks. So if you're looking for a slip, I always encourage people to wait until the second week of March to look for income slips, because that's going to be your guarantee. They should all be available to you. You can also find RRSP contribution slips in here, tuition slips in here, your RRSP deduction limit, your tax-free savings account deduction limit. It's a really, really useful portal to be signed up for. So I really encourage you, if you haven't, to please sign up for My Account. The other quick trick with My Account, there's these two top right-hand corner options. Mail, that's where you're going to get any mail that might be the CRA asking you to provide backup. You always want to check your mail with the CRA. Canada's tax system is basically, it's a self-assessed system where we tell them what we think we owe, and they either agree or they don't. They're not going through all of our books and going, yes, no, yes, no. Like in England, where you don't file a tax return, in England, the taxes are done for you. Here, we tell them what we think we owe, and oftentimes they will ask to review things. And people will email me all the time and say, I'm being audited. And I say, send me the letter. And the letter says, this isn't an audit. People get very panicky about it. It's very scary. But we have, because of our self-assessment system, the CRA, it is their duty and their job to follow up and confirm. They just do broad sweeps. They'll say, this year we're going to review people who've claimed Metro passes. That was a claim we had a couple of years ago. People could claim some Metro pass expense. And so they'll send a letter saying, send us your Metro passes. And it's not personal. It's that they randomly pick people who have Metro pass claims and they're asking for proof. Where they're doing this more often now is rent. So if you're claiming that Trillium benefit, they'll want to see proof of rent paid. Rent receipts are really handy to get from your landlord. They will also review medical expenses and charitable donations. So whenever possible, you should be checking your mail for those letters. They give you a 30-day window and they ask you to use Submit My Documents, which is the other option here to submit the information. Up until about 2 years ago, the CRA's preferred method of communication was fax. They still want you to fax. Some departments still want you to fax. Last year in the middle of the pandemic, I had to go out and find a fax machine, to find like a Kinko's that was open to fax something to a department of the CRA. But Submit My Documents is a really, really great way to get paper-free, quick communication with the government. So these two little buttons here in My Account, you'll use them. They're really handy. We're saving paper. We're communicating quickly and efficiently. So do yourself a favor if you haven't already. Sign up for My Account and use it, because it's, we've paid tax to build this system. Our tax dollars are going to make this software, so it's ours to use. So please don't be afraid to peek in on that. All right. So that's the intros for tax. The next big question people have, and this is becoming more and more complicated as online e-commerce is becoming a thing, as well as gig economy work. What is taxable income? And pretty much everything is taxable. So obviously your employment income. So if you're getting a T4, and a T4 is a slip that says I was an employee and my boss withheld my tax and CPP and EI contributions, they gave me a T4, I was an employee. It's different from something called a T4A, which a lot of freelancers get, which is a T4A says this person is not an employee. What the difference is between having employed income and unemployed and self-employed income is self-employed, you're expected to cover the costs of running your business, which is where those write-offs we'll talk about come in. The costs of running my business, my rent, et cetera, I get to write off. But if I'm an employee, if I have a day job, I work in a restaurant, my boss is paying those expenses. My boss, the owner of the restaurant, is paying the rent to keep the restaurant open and is paying the cook and is paying the hydro. They get the expenses, they get the write-offs. So when we're trying to figure out where expenses figure in, but to make sure that we're not claiming expenses against day job income. And a lot of artists have day jobs because art's hard to make a living at. So we don't want to start to claim things like, if I worked in a restaurant and I have a freelance practice, I don't want to be writing off the cost of my day job in the restaurant on my freelance business. If I'm a waitress, a server by day and an actor by night, and I have to buy a bunch of clothes for waitering, I don't get to write them off because the waitering is an employed job. So even though I'm having to buy clothes for my waitering gig, there's no write-off for that, unfortunately. But there is write-offs from acting work, which we'll talk about when we get to write-offs. So employment income, grants, we're going to do a bit more on grants in a minute, but grants are taxable and they're complicated. And one of the most common letters that goes out that we talked about from my account, those letters, people who receive grants get letters all the time asking for proof of where the grants are. There's a real catch-22 that the CRA has created. The CRA has created, and they're trying to fix it, but it's not perfect yet. The CRA has mandated that granting bodies put grant income onto a T4A in a box, we have, slips have a bunch of different boxes in them. And the income for grants is recorded in a way that is confusing to the CRA. So the CRA is telling granting bodies to put the money into a place that is confusing for them. So that's on them. The CRA is doing it to themselves, but people who receive grants will get letters really often asking for more information about the grants, because most T4As are used to report scholarship income for students. That is the majority of T4As, is probably just student scholarships. And those are non-taxable. You've got to report them, but they're non-taxable. But that same form with the income in a different box says artist project grant, which is taxable. Or it can be, the T4A can just be from XSpace. XSpace could give you a T4A. I don't know if they do, but a T4A for an artist fee, that's taxable as well. So T4As are taxable for the most part, except for those scholarship amounts. And if you're confused and you just Google the box number, it'll tell you what kind of information you're getting. Box 105 is scholarships, box 48 is a fee for service. These are not important right now. If you're confused, you can find that information out, but just know that grants are taxable. Cash payments are also taxable. People often think, it's cash, no one really knows. As a tax preparer, it is my job and my due diligence to tell you that the cash is taxable. So tips and babysitting and lawn mowing. And if you have a craft fair and you're getting cash, it's taxable. Obviously, I'm not your police officer, so I don't police that. But the only real place where we can get in trouble as tax filers is when we're hiding income. I've never heard of anybody go to jail for hiding income. Al Capone was caught for tax evasion. And that's the only example we have, but it's a well-known one. But you have to report your income. Obviously, servers and tips, it's a whole thing, but the CRA is working on finding ways to crack down on people who don't report tips. So do your best to keep track of cash income. It could be that you use a notebook to record your cash income, or you use an Excel document, but keep track of cash. Investment income is taxable, and that includes crypto. So I don't know a lot about crypto because I don't want to know about crypto, but crypto is taxable, and it's taxable when there's a capital gain. So with all investments, the money is taxable when you've made when you sell something. So I invest some money, I invest $500 in stock X, and it does a bunch of stuff. And then 2 years later, I pull $600 out. I'm only going to pay tax on the $100 that I made of profit. That's a capital gain. So the same would go with crypto. So if you're buying crypto for X dollars and selling crypto for X dollars, and there's a profit, you need to be reporting that on your tax return. So keep track of that kind of stuff. I don't know a ton about NFTs, unfortunately, because I'm old and I just can't get my head around it. But all that stuff, just know that there's a tax implication, and the government is working hard to catch people who are avoiding that kind of reporting. So do yourself a favor and keep track of your investments. Most investments are going to come with information on a slip called a T3 or a T5, and it's going to be easy to report. But things like crypto are going to be up to you to figure out. So keep track of it. Another big question mark people have is things like Patreon, online sources like ad sales. All of these things, Kickstarters, Indiegogo, these are all taxable income. Etsy shops will give you reports. Like if you're using a Shopify, you'll get monthly reports of sales. PayPal will give you monthly sales reports. These are all there for your tax purposes. Ad sales from Google Ads, Facebook ads are there. They make money. Google Ads will pay you. You need to report this stuff on your taxes. And the same thing with Kickstarters and Indiegogos. If you're raising funds to make art, that income is taxable. If you're raising funds to take care of your health, you have a health issue, that's different. People are giving you a gift for personal reasons. It's not taxable as far as we know, right? Things can change, but when you're raising funds for work or for art, it's taxable. And if you're selling goods, the income is taxable. So keep track of that stuff. Most of these sources will be able to give you a decent monthly report of revenue. And don't be confused by what you get from the Shopify or PayPal versus what you sold things for. There is a fee that most of these sources will take from you to collect money for you. And what we need to be reporting is what we made, not what we paid, not what we received. So an example of that would be I sell t-shirts for $25 on a website. through PayPal. I sell the t-shirt for $25 and I received $22 from PayPal because they take $3 along the way. But what my income is $25. And then I have an expense of paying PayPal $3. So when we're reporting our income and it's unclear what you need to report, bear in mind that what we're reporting for income is what the good sold for or the service sold for, not what was actually received because of those fees that are taken from us. But those fees that are taken from us are an expense. So we're still claiming the same basic $22 that I made from that shirt, but we're claiming it as I made 25 and I paid $3 to make the 25. So that's gross income versus net income. I made $25 selling a shirt, but I paid $3 to sell the shirt, which is my expense. I'm gonna pay tax on 22. The same bottom line, but we're showing transparency of what I made and what I paid to make the money. And this can be a really important, I need a tissue. Hold on 1 second. This technique of reporting what we sold versus what we received, it can be really important for artists who are not having great years. So as freelancers, we have a duty to provide proof of reasonable expectation of profit to the government, which allows us to run a business. We need to prove to them that we're not hobbyists. And it seems offensive that the government would want us to prove we're not hobbyists, but that's what they want. Basically, they can deem us hobbyists. There was a big furor a couple of years ago around a sculptor, a very famous Canadian sculptor called Steve Higgins. He's older, he lives in Nova Scotia, he teaches at NASCAD, he's a professor of sculpting, and he was audited by the CRA and deemed to be a hobbyist because his income was from grants and not from fees for services or sales. This was a problem on a lot of fronts. First problem was that the one body of the government, the Canada Revenue Agency, was saying he wasn't an artist, and another body of the government, the Canada Council, was saying he was an artist. So how can two bodies of the government disagree? Fundamental flaw in the system there. So that was the first problem. Two, the issue of the grant deeming him a hobbyist didn't take into account the nature of the work they did, which was sculpting. Sculpture is hard to sell because it can be big. It tends to often be something that is institutionalized, purchased for institutions or made public art, right? So he's not showing sales, but he still has professional revenue coming in through the grant. And three, the government disagreed that he was a professional artist, even though he was teaching his art form as a living. So there was a lot wrong with this audit, and it made the news quite heavily. A lot of people came on pro bono to fight the ruling against him because it was tens of thousands of dollars the government wanted from him. And I met with Steve Higgins last year, and he told me the story. And basically, this auditor just didn't like Steve, and which is hard to believe because Steve was a lovely man. And this is nothing that I'm telling a secret. It's news. It's been in the news, and he tells the story publicly. But the auditor just didn't like him, and said really horrible things to him. And that happens. I've heard the story of an auditor being jerky once, and it was with him. I have an example of an audit that went really well. My sister is a personal trainer, and she's incorporated, and she was audited for 3 years, and her auditor was lovely. It wasn't a fun experience. It wasn't easy, but her auditor was kind and patient and thoughtful and helpful. So don't be afraid of audits. Know that most people who work at the government are kind and patient and thoughtful. Sometimes you get a bad egg. All that to say, report your income. Don't get on the bad side. And the whole point of this sort of tangent was we need to show that we've made money to prove that we're not hobbyists. So having a little bit of extra income, the difference between the $25 shirt sale and $22 shirt sale, a little bit more income shows that I'm a business and that I've paid somebody to help me be in business. So I've paid PayPal. In my line of work, which is I'm an actor, my agent I get a cut of, I get money like 10 times after it's been touched by everybody else. I get a little bit at the end of it, because before I get it, the union takes a cut and my agent takes a cut, and various people can take cuts of the money that I get. But I still have to report what I was billed out for. So my agent will tell them my day rate, which is not very much, and they pay me that, and I have to report that as my income. And then I pay my agent to make that money for me, and I pay the unions to be a member of the union. Both of those expenses are great expenses, because it proves to the government that I haven't, that I'm not a hobbyist, because hobbyists don't pay to be members of professional unions, and they don't pay agents to get them work. To me, a hobbyist is somebody who doesn't want to make money from their art. And we definitely had a client a couple of years ago who was called by the government and asked about their business, and she said she had no intention of making money doing her art, and that opened up a big kettle of worms for her, because in order to run the businesses the way we do with these tax returns, we need to say we want to make money, because if we don't want to make money, we don't get to have the write-offs. We don't get to run a business. If we have no intent to make money, we're not a business. That's what the CRA says. So it's not about making money, it's about showing intent. And showing intent is important. And so paying PayPal $3 to sell a t-shirt is important, because it shows intent to make money. So we always want to be keeping an eye on the ability to prove we have intent to be running a business. Some artists don't want to make money, and that's great. And that's you know, if they just do it for the love of the art, great. But don't try to run a business because of it, because you might get in trouble, and it'll be hard to get yourself out of it. So make sure you show intent any way you can, and intent can be expenses, which we'll talk about. Where are we at here? Momentarily, we'll talk about it. We're going to do a little bit more of a deep dive into grants. I'm running a little behind here. Grants. There were some questions about grants in the advanced questions I got, and one of them was about deferring grants, or when we receive a grant, we don't spend it all. This has been really common in the last couple of years with COVID, where we applied for grants in 2019 with the intent of making art in 2020, which was then deferred because of COVID. And there are these things called the GAP rules. The GAP rules is the generally accepted accounting principles, which is how we all function. We all in the accounting world in the government functions with GAP rules. The GAP rules one of the rules is the matching principle, whereby the income and the expense should match in the same period, the same year. So if we got, let's see, my little sidebar is blocking things a little bit. I don't know about you, but my head is blocking the part of me that I want to show you, which is part 3B, professional income. I have to scooch myself over. Basically, this is the best and easiest way to deal with grant money that we didn't spend. So the rule with deferring grants, we get a grant, it's supposed to be spent. We've provided the granting body with a budget that says this is how it's going to be spent. And then something happens whereby either the grant comes late and we didn't get to spend it all. The COVID happens, we don't get to spend our grant. For a lot of reasons, deferring is reasonable. So deferral just means I got it now, but I'm going to save it for later. And the easiest way to do that, if you are doing your own taxes, this screen cap that I'm showing is part of the form T2125. And that's the form that I was telling you about that artists and freelancers will use to do their taxes. I encourage people with complicated taxes to hire an accountant, because I encourage people to see an accountant even just once, just to have like the pro look at your numbers and go, this looks good. If you're good at numbers, more power to you, do them yourself, but seeing an accountant one time just to make sure you're on the right track can be really helpful. If you're seeing an accountant, they should be able to understand the rule of deferral. And if they don't, you're seeing the wrong accountant. Not all accountants will understand grants, but a lot of them do. How to deal with a grant that you've made and you're not going to spend right away. We want to save that income for the year that we spend the money. So that's where the matching comes in. The example that I have here is we made $50,000. And out of that 50,000, 20,000, I'm not going to use until the next year, so I'm going to defer it. And the area that we defer that in is called the work in progress. So it's the WIP. The work in progress is, I got some money and the work is still in progress, so I'm going to save it for when I spend the money. So you still need to show the grant money that you made. I made all this grant money and it's great, but I need to save some of it for next year. So here it is, I made it. and I'm going to remove this 20,000. I'm going to save it for the next year. And then the next year you put that 20,000 where the original 50,000 is. I don't know if you can see it because on my end, the talk boxes, which is me, are in the way. But basically in part 3B, professional income, line 3H shows the grant money coming in. Line 3N shows the WIP. And then line 3C, 30 shows what's left that I'm going to pay tax on this year. So line 3, let's see again, my head is in the way. Can you move me down there? Line 3H is where all my income is going to go. So I'm going to add up gross professional fees. I usually don't include my GST just for the sake of clarity. We'll talk about GST at the end of this, but you can. You would reduce your income by the GST. The thing about GST is that it's not taxable income to you, unlike grants. Grants are taxable income to you. So trying to keep the GST out is not a bad idea, basically. So in that line 3H, you're going to be including totals from any T4As, honorariums, Kickstarters, Indiegogos, all of that stuff gets added together in 3H. And then you do a bit of math. You either reduce the HST if you've included it, you reduce any WIP if you've included it, and you pay tax on that bottom line, which is going to be line 30, alphabet. It's the alphabet. I got this. All right. So that is the acceptable government sanctioned way to defer a grant, because we know that grants are taxable. So that's a quick, and this form, the T2125, it's 4 pages long. This is page 2 of it. So there's a lot more on this form. Most of it is really straightforward. It's like, what are your expenses? Office supplies. But this part here, the WIP, the work in progress, most people don't know about it. And it's just a nice little trick to know about, which allows us to defer grants. But you can only defer them if you can back up the claim that you didn't do the work, backing it up by showing that your expenses are going to be in the next year. It's the easiest example is from a lot of my clients who have theater companies. They had a calendar of works to present in 2020, in the spring of 2020, and they've all been deferred. And the expenses related to that couldn't have been spent because they didn't rent a space and they didn't pay any actors or designers or directors. All those expenses are going to get moved to 2 years from now. So then the income will get moved to 2 years from now as well. So hopefully that makes sense. If it doesn't, we can talk about it in the question and answer period. But just know that grants are taxable. You have to report them, but you can also defer them, and it's perfectly allowed. It's legit, and it's not hard to do. Knowing where to do it is either to know which account to go to help you with it, or to know that there's this little area here, which is the work in progress. Now, this form is not necessarily available to you if you're doing like a TurboTax or a U-file. So people who do their taxes by themselves, TurboTax and U-file, those other ones can be a little bit limited because they don't think you're going to do sophisticated taxes, and grant deferral is sophisticated. So I cannot speak to I don't have the knowledge of whether you can do this kind of information with TurboTax or U-file. If you're doing it, I think with Studio Tax you can. Studio Tax is another one that seems to be more friendly to artists. But generally speaking, if you're getting into the world of grants and deferrals, hiring an accountant is not a bad idea, because taxes are complicated, grants and deferrals are complicated, and seeing an accountant is a write-off, which is a great thing. Just an extra little bit of a write-off there for you. So grants, just a quickie on grants there. The only other thing to talk about with grants is that those letters that will come out, we talked about, the government doesn't know where you've put your grant. And we get a lot of letters, they come out, we got a bunch last week. They come out in sort of rashes of like, everybody who got this kind of a grant got a letter 2 weeks ago saying, hey, you didn't report this grant income. The government doesn't know to look for the grant income in this part 3B because they think they default to thinking it's a scholarship. So if you're an recipient of a fair amount of grants, you're going to get a lot of letters from the CRA every year saying, where's your grant money? And it's not an audit, it's just a review. It's just them confirming, double checking that you've reported the money that they know you've made because they have a copy of the slip. So typically responding to that letter is just a matter of saying, oh, I reported that income, it's on line X of my tax return. And here's a copy of my tax return with line X. And it's as simple as that. So just know that with grants, as great as they are, they do make your accounting more complicated, and they will require generally a bit more follow-up on the CRA's side. The CRA is now also adding in the requirement that not only do you provide proof you've claimed the income, but you provide a letter from the granting body that says, yeah, we know Jim Smith, and we gave him a grant for an artist project, and we are okay with him saying it's a grant. So that's a new criteria that's being enforced more often. You need to have a letter from the granting body say you got a grant. So when you get your grant approval letter, it'll say, hey, Jim, congratulations, you got a grant. Keep it, keep that letter, it's important. Know that you'll probably have to give it to the CRA at some point. People oftentimes are not sure quite how to deal with invoicing. So this is just a template I pulled up from Word. If you go into Word and you search templates for invoices, easy way to do an invoice. The important parts here are that you have subtotals, tax. If you have an HST number, you want to include this setup. So you have your subtotals, your sales tax, your total due, prices, your name, and people forget this oftentimes, your name, how you want to get paid. These days, people can mail you checks, they can do e-transfers, they can do wires. Be really clear if you're invoicing people, how can they pay you? Don't make them come to you and ask how to get paid. Say, you can put it in the instructions, e-transfer at this address, wire transfer at this address. Tell them how to pay you. Like, make it as easy as possible for people to give you money. It's just common sense, but it's often forgot is how to pay people. So make sure that people know how to pay you in your invoicing. Now, this is a template from Word, but there were also, let's see, what screen are we on? Nope, we'll come back to that. There are also softwares who will do it for you, and we'll talk about the softwares in a bit. But if you're just doing a basic invoice for fee for service, this is a nice little sample of an example. That was a bit redundant, but you know what I mean. The important thing, sort of the last key detail when it comes to invoicing is making sure you're dating your invoices. And where it gets really muddy and where people I find commonly get confused, especially when they're new to doing freelances, invoicing and like December and January, and where does the money fall? If you did the work in December and you got paid in January, where does the money fall? There are two ways of doing bookkeeping. There's the cash method of bookkeeping, there's the accrual method of bookkeeping. Cash is the day I got the money is the day I made the money. And accrual is the day I did the work is the day I got paid, even if I didn't get paid. And predominantly accrual is industry standard. Most people will use accrual, including the government. There was a good example of accrual method accounting was when the CERB was first introduced, and you needed to have made $5,000 and you needed to report the income that you made as you made it, and people were getting royalty checks in April 2020 and going, oh my God, I made money and I already asked for CERB and now I'm gonna have to pay it back. The government was working with what they called the accrual method, which was a royalty. You did the work a while ago. You happen to get the money now, but the royalty was from something you prior worked on. So that income from royalties didn't count in that reporting income that you had to report to get your CERB, because accrual method indicated that the royalty income was earned when you did the work and not when you got paid. So accrual method is basically pretty standard. And so when you're dating your invoice, it can be really handy to have that date solidified with how you're doing your bookkeeping. So for me, for an example, I do my bookkeeping once a month, and I typically do it like January 5th. I'm invoicing my December work. So I wait 5 days and I invoice the prior month. But when I'm invoicing, I date my invoices for December because that's when I did the work. That just means that I'm doing my math at the end of the year. I don't have to wonder about like, is the money going to land in this year or the next year for tax purposes? I'm looking at the date I did the work and not the date I got the money, so that it's all in a neat package of this year, this invoice date, this is the time that I'm reporting the income. And I report the income and I pay tax on it, and then I have to report it the next year when I get paid. So you want to keep track of the invoice number, or you can go with the cash method, which is when I got the money is when I pay the tax. Either way is good as long as you're applying consistent rules and knowing that predominantly the world works on accrual, which is when you date the date of the invoice for the day you're going to get paid. That's more common than the cash method, but they're both allowed. Just make sure that you know which method you're going to pick and add the date of your invoice, or keep track of the dates of your invoice or date of getting paid, or you should keep track of both, but keep track of them for bookkeeping purposes. Where are we at? So we're going to talk a little bit about the difference between corporation and self-employed, and we're going to add partnerships to this. I want to just check timing wise because we're going to do a pee break in a little after this segment. We'll do a quick pee break. I'll have a quick drink. So I get questions about incorporation versus self-employed and partnerships often. The pros and cons, the reasons to, the reasons not to. For the sake of this conversation, partnership is basically part of being self-employed. And we'll talk a bit more about partnerships in a minute, but basically when we're talking about a self-employed, know that a partnership can fall into that area versus an incorporation, which can be more than one person, but it's still an incorporation. People like to get fancy with their incorporations, or they get kind of ahead of themselves when it comes to being freelance, and they want to be incorporated because they think that it's the right thing to do. But incorporation is not something to jump into lightly. There's pros and cons for incorporation. The pros being you pay less tax for being incorporated and you have some liability protection. The con being it's much more expensive. One of the main cons is it's much more expensive to have a corporation. So the way corporations work, and two of the main reasons to incorporate are I'm making so much money I can't possibly spend it all. So I'm going to go for a place where I'm going to pay less tax on that money. I'm going to incorporate. The other reason would be like my sister. She's a personal trainer, and she could hurt somebody, and they could sue her. And she owned a home and didn't want to lose the home in a lawsuit, so she incorporated. So that if somebody was to sue her, which no one did, if someone was to sue her, they couldn't take her home. They could just take money from the corporation. So incorporating can keep your assets at arm's length from any litigious people, and also you pay less tax. The basic minimum tax for a corporation is about 13.5% for the first $500,000 you make, and it goes up from there. But the cost of incorporating, you might spend $1,500 to pay someone to set up your corp. You'll spend another $2,000 to $4,000 to have a corporate tax return prepared, and you'll spend $1,000 a year for bookkeeping. So that first year of incorporation could run you $4,000 or more dollars. It might be cheaper going forward, might be more expensive. Just knowing that incorporation can cost you that much money can offset the potential tax savings of incorporating. So self-employed is just, again, just a plain old Canadian tax return. It's straightforward, it's simple, it's what we file regardless. When you're incorporated, you still have to file a tax return, a personal tax return. So you're still filing that regardless. We do pay more tax as individuals than we do as incorporations. So the basic personal tax rate for starting out is 20%, basically. For the first tax bracket, you're paying about 20%, which is, so the first $45,000 you make, you're paying the lowest tax. The next $45,000 in or around there, you're paying the next bracket, about 26%, goes up and goes up and goes up. And you're only paying the higher brackets on the amount that you were over the first bracket. So if you made $50,000, you'll pay the lowest possible tax rate on the first $45,000 you've made. You pay a little bit higher tax on the next $5,000. And those brackets are rough because I think it changes every year, and I don't remember what the brackets are this year, but those are the rough brackets. So the difference between paying low tax from the incorporation or paying higher tax from the corp, from the self-employed, is that if you need money from the corp to live off of, you're still going to be paying it at the regular tax rate. So most corporations will put, so I say me, Tova, becomes a successful actor, wouldn't that be nice? And need to incorporate, I would then become an employee of my corporation. So my corporation would pay me either as a T4, I'd become an employee, and my corporation would pay tax and CPP for me. I'd be paying it, they would be remitting it, or I could pull up some dividends. Either way, whatever I'm pulling out of the corporation to use personally, I'm paying at the same old tax rate. So if I incorporate to save tax, and then I pull all that money out of the corporation to use personally to buy a home or to pay off debt, I'm paying the higher tax rate regardless. And so if you're not a good money manager and just need all that money from a corporation, incorporating is a bad idea, because when you're paying a lot of money to be incorporated, but taking all the money out to use as a sole proprietor, or to use as an individual, and you're still paying a lot of tax, but also paying a lot of tax to have your corporate taxes done. So jumping into an incorporation is not something to take lightly. There is a cost assessment to be done to make sure that it's worth it. But if you are making too much money that you don't need it and you can't spend it, you should incorporate. It's totally a good thing. Now, partnerships in our artist world could be like a small theater company. Why am I so congested? Sorry, so congested. Charming. All right. Partnerships can be a theater company. They can be 2 mural artists. They can be a couple of designers getting together to make art together. Partnerships generally are just sole proprietorships with individual tax returns. And we wouldn't need to get into incorporation again unless it was for a liability or high cash income situation. But if it's just 2 people who are making art together, the easiest way to deal with a partnership is to have one of those T2125s we talked about. That's the statement of business income. Having one of those, that's basically just divided into 2. So let's just poke ahead for a second. This is a more user-friendly version of an income statement to a T2125. This is a visual artist. It's all of your income. It's all of your expenses. It's the net profit or loss. With a partnership, you would make one of these with the partnership's income and expenses, and the net profit or loss is just divided in 2. Or it can be divided, if it's a partnership that's sort of like a 60-40 or a 90-10, that can be done as well. And there's a place on the tax return form where you can divide it up and split it up. But to keep a partnership simple, it's just a matter of creating your business statement and then divvying it up on your tax return. So ideally, a partnership would have one person handling all the numbers and building this thing that I've made. And then sharing it amongst the other partners, whether there's 2 partners or 4 partners, it can be as many as you want, but you have to all have the same numbers to divvy up. So having one part of the partnership, who I usually call them the wallet. If there's a person in the partnership who can be the wallet and can handle the money, they should be doing should have one person handling all the money, divvying it up, and making sure that we're all sharing the same information amongst everybody. And that's the best way to handle a partnership. So let's see. I think we'll do a quick pee break now because we've been going for an hour. So let's give everybody 5 minutes to stretch their legs, grab a glass of water, and we will come back at 3:13. That's 5 minutes. So go and do a quick bio break. Hi, everybody. I'm back. I don't know if you are. I can't see anybody, but I'm here. Hi, Natalie.
Hello.
I was just looking in the chat to see if anything had come up while I was deep in tax talk. And thank you to those who put up the name Studio Tax, which is the software I was talking about. There's the link to the My Account, which is great. And there was some questions which I think we'll save for the Q&A period from Amelia and Therese. And templates. There's a template on the Word template. Probably someone's talking about the invoice that I posted about the template. That is just a Word document template. And then we will keep on going. Okay, great. So talked about incorporation versus self-incorporation, self-proprietary. Talk about invoicing here. And someone put this in the chat. Invoicing, bookkeeping. We're talking about bookkeeping now, everyone's favorite topic. How to bookkeep. So when I started out as a client of Artbooks, as a sole proprietor, as an actor who didn't make any money, I used a notebook with a pen and paper to keep track of stuff. And I also used Excel. So you can do a lot of different ways of keeping track of your books. Some of the apps people will ask me referrals for, the apps that most people will use, Standard, QuickBooks, FreshBooks, Xero, Wave, Cashew. Some of them are Canadian. I think FreshBooks, Wave, Xero. Most of them are Canadian, actually. I think QuickBooks is American. FreshBooks is Canadian, I know for sure. These are apps that are generally affordable. They go from low to no cost to QuickBooks, which is generally at this point about $50 a month. You can get it for 25 for a simple QuickBooks. But basically, these are softwares where you can keep track of expenses. And even if you don't use them for expenses, you can invoice. And invoicing is great. It's a great function. My therapist uses FreshBooks. She sends me my invoice through FreshBooks, which is nice of her. And there is the option that I can even pay her by credit card. A lot of these apps are now taking credit cards for their users. And that can be great, but just bear in mind that the credit card percentages that they take can be pretty predatory. And I don't think that they're any cheaper if you're using one of these softwares. I think they're more expensive than if you're using the terminal at the store. So know that if you do end up using a credit card processing through QuickBooks, FreshBooks, Xero, Wave, they will take a cut. And that cut goes back to that whole example of selling a t-shirt. What I sold the product for, the cut that FreshBooks takes, they're separate. What I made, what I spent to make the money, they're claimed separately, income and expense. But these are all standard issue good softwares that you can be using to issue invoices. And certainly if you're invoicing a lot, using an app is great because you can send a really slick invoice. You can add your logo to it, emailed, you can receive money. They have people can click on the link and get a PDF. So if you are into your apps and your tech, doing and you have some money to spend on a monthly expense, using this is great. And using one of these is also going to be a write-off because the monthly cost is an expense. So we're going to do a quick talk on expenses because everyone's favorite thing is what to write off. Actually, I'm going to hide that. I'm going to hide that screen for a second because what I want to do real quick is to have people just in the chat brainstorm what they think expenses they can write off. We'll get everyone to do for like 3 minutes till 3:20. Toss in some ideas of what you think your expenses are, and then we'll talk about them. So go ahead with the chat, pop in what you think an expense is. It doesn't, and we'll talk about them. We've got Adobe Creative Cloud, materials, art supplies, production costs, payment processing fees, rent. Keep throwing them out there. What do we got? Bills. Bills is too vague. Car rentals, travel fees, studio rent, laptops. These are all great. Gas, mileage. Paying collab, uniforms, whoa, Fast and Furious. This is great. Shipping fees, camera, accountant fees, absolutely. These are all great expenses. Anybody else question? How can this be written in the chat? Often hard to differentiate from the discussion. Oh, okay. So someone is having a problem with the captioning. What is the question? How can this be written in the chat? Often hard to differentiate. The question for is we are brainstorming expenses. There we go. Okay. Debts. Someone asked a question about debts. Let's see. Working from home expenses. These are all great. Does anybody have, at least I said do it 3 minutes, but I think we've kind of got a lot. Epsom salts for dancer, that's very specific. Studio space, books, client meetings, these are all great. Travel expenses. This is really normal that I'm missing one of the most important expenses that I don't see coming up very often. Keep trying, keep working on it. There we go, website fees, that's advertising. We're going to talk about this in detail, but people forget about advertising. It's great. Zoom, phone bills. All right, this is like watching popcorn. The popcorn has stopped popping, so we'll start to talk about it a little bit. This is some great brainstorming, and these are generally really good expenses. So as a freelancer, we are responsible for spending money to make money, basically. So we run a business, we have to spend money to make money. The same way I use the example of if I worked in a restaurant, the owner of the restaurant is paying for rent and the chef and hopefully the aprons and the food, and those are his expenses, their expenses. For me as an artist, I'm writing off the cost of my rent and my art supplies, et cetera, et cetera. Now, I have a feeling we have a diversity of artists practicing because some of the expenses that were thrown out there were different. There was Epsom salts for dancers and there was computers and cameras. So I will talk as broadly as I can, but the way that we loosely approach expenses is adding a filter of what's reasonable to your business. So for me as an actor, Epsom salts are not a reasonable expense because I'm not a dancer. Epsom salts might be reasonable for a dancer. That's an unusual expense. And I would say to the dancer, maybe is the answer to your Epsom salts question. The theory behind expenses is we want to paint the picture of having a respectable business, respectable and normal. Those are both stupid words to apply to art, but the CRA is narrow-minded, and the people that are there are people there who don't necessarily understand how it works. So we want to present a picture, a snapshot of our business to the government with our income statement, which is that T2125 we talked about. So we need to present a business that looks legitimate. And oftentimes the very first things that people will yell out when we're doing this in person, I have people that yell things out, is they'll say food, rent. Like, those are really common. Those are things we spend money on the most, food and rent. They're also the ones we want to be conservative about. So we wanted to keep that thought of what's reasonable in place when we're dealing with our expenses. What is a reasonable expense? For me as an actor, it's not reasonable to be writing off my face wash, even though I need to have good skin. It's not reasonable because I'd be washing my face regardless, I hope. But it is reasonable for me to write off the cost of paying my agent. So I always apply the what's reasonable, specifically to things that there is a biological or societal imperative for us to spend money on. So biological, housing, food, biological. Societal would be clothing, that kind of stuff. We want to apply a filter of what's reasonable. So when it comes to our home, if we're working from home, because we are, everybody is working from home, what is reasonable when it comes to home office? Now, there's been a lot of changes to home office expenses with COVID, and I'm only going to be talking about the self-employed home office expense. There were credits that were available to people who had day jobs and that were forced to work from home that are different. And those are day job specific, and they're a different credit, and I'm not going to worry about it. I'm going to be talking about the expense, my business expense of writing off part of my home. Back in the day when Artbooks worked in person, we would get people who were new to us to draw a floor plan of their home. Literally just draw a bird's eye view of their home, walls, and where's your bed and where's your computer. And we would look at where the computer was in relation to the rest of the house, and we would take a percentage of our home based on the drawing. But now I'm not in person, and it's hard to get people to draw on Zoom. So thinking about your home and how much of it is business related, you think about like looking from the bird's eye view down and going, well, how many rooms are there and where's my office? Obviously for me, I'm working in my entire home now because I'm doing all of my self-tapes there, like right there in my living room, because the light is good. And I have an office in the other end of the apartment, which is where my computer is. As a person who has dealt with the CRA before, I don't claim my whole home because I know it's going to go nowhere, even though I'm very clearly using my living room for home office. I claim my office because I have an office. It's a place that I only use for work. I don't go in there for anything else. Unlike this part of my home here, which is my living room, I use it mostly for lying around on the couch watching shitty TV. It's very personal. There's a small portion that is business, but I don't even touch that. So when you're looking at how you want to claim your home office, sorry, I got distracted by the chat. I'm gonna have to hide the chat for a minute because I'm a little distracted by it. There we go. When you're thinking about how much of your home to claim for business, try to be conservative. It's not really worth the fight to fight for home office expense. I had a client who was a sculptor who really, really fought hard to claim his entire home. Not his entire home, we wouldn't let him do that. But he wanted to claim a lot of his home, and the CRA just flat out said no. And it said no in a way that really scarred him. So you want to be careful when it comes to home office expense. What can be claimed in that bucket of expense for home office is going to be the running costs of the home. So never anything that is involved with like buying a home. So no mortgage payments. You can claim the mortgage interest, which is the running cost, but you cannot claim the mortgage. So if I rent a home, I can claim a portion of my rent, my tenant insurance, utilities, like heat and hydro, any general repairs to the home, like garbage bags, light bulbs, that kind of stuff. I would take all of those and add them together and take a percentage away for personal and claim a business use. If I own a home, it's going to be the costs that are, again, the running costs. So condo fees, mortgage interest, not principal, property tax, repairs, owner's insurance, never renovations, because renovations increase the value of the asset that you own. So in dealing with my home office, I take the running costs of my home, take a percentage out for personal, and I'm conservative. I take a quarter of my home for business because I have 4 rooms. I have a bedroom, a bathroom, a kitchen, living room, is 1 room, and an office. So I have 4 rooms and 1 room in my office. I take a quarter. Be conservative with your home. Another place to be conservative with is food. So one of the things that came in the chat was client meetings. Absolutely, client meetings are a business expense. The way that we look at things that are food related is when I'm in the city that I live in, so Toronto, for the sake of today, I've got to be out with somebody talking about business to write it off. If I am out running errands for my business and I grab a sandwich, it's not a business expense because I could have gone home. I have to be with somebody, and it has to be with somebody who can lead to a line of income. I don't have to buy their food. I can only buy my own, but I have to be with somebody in town. If I am sent away from home overnight to do work, if I'm sent to LA, wouldn't that be nice to do work? I can be alone and write off some of the meals because I've been forced away from my home. But if I'm in town, I've got to be with somebody, and if I'm out of town, I can be with somebody or alone. And the rule with those 2 food categories, which are networking meals, basically, I'm only allowed to write off half of the food. So I take my full value of those business meetings and then cut them in half and claim a half. And there's a place where you show the full value and then the math, so the government sees we're doing the math. Here's the full amount, less half for personal. That's the rule. However, if I'm a visual artist or I'm presenting anything in the way of an opening night or a reception, and I'm buying cheese plates and wine for 100 people, I wouldn't put that food in that category because of the implied loss of half of it. We have to take away half of food when we're networking. But if we're providing food for catering, for craft services, for a reception where we're feeding a lot of people, you're not eating half the food. You're not losing half the value of the food. We wouldn't put it into the category. And just so we're clear, the category is called business entertainment. That's the place you put your food, your networking food. It sounds really clunky, business entertainment, and it's not a place where we put things like admissions to shows and galleries. It's just for food, because the rule of half has to be reduced is just for that category. But if I was to have an opening night party, have a reception, buy some platters, buy some catering, I'd make a category called catering. It could be an advertising expense, but it would not be the same as the networking meals. So there's 2 more categories that are gray area. One of them is having a car or a bike, something that we use repetitively for business and personal. The same rule of taking the whole running cost and taking a percentage out applies. So where I was taking the running cost of my home and my insurance, I would apply that to my car. So for the car, it could be insurance and repairs and gas, all of the value of the running costs of my car, take a percentage of that for business. And again, being reasonable about that. The CRA encourages people to take mileage logbooks, which is really a pain in the butt. But you can do an odometer reading once a year, like on January 1, take your reading January 1, 2021, take it again January 1, 2022, and what you drove in that year. You've got an amount of mileage we can guess at, and we can then just take a percentage of that. So keeping track of your mileage. If you own a car, if you're leasing a car, percentage of your lease payments is allowable as a claim. And if you own a bike, if you're using a bike, it's the same kind of thing of running your bike, the repairs and the maintenance and there's no gas, repairs and maintenance for your bike would be something you can take a percentage of. So 3 areas of fairly personal use what we want to be careful of, and the last one is clothing. So we all, we've got to be dressed. We want to not be naked. Maybe we do want to be naked. That's fine. Less write-offs for you then. Clothing, we have to be careful of. Me as an actor, I write off almost nothing because if I buy a shirt because it looks good on me and I wear it to auditions, I bought it because I liked it. I didn't buy it for auditions. Where I get to write off clothing is if I'm buying costumes. So you want to be able to delineate work from business. So if I had an area for my costumes, and for me, costumes generally are medical clothing because I audition mostly for doctors and nurses and psychiatrists these days. That's what I go out for, is because I'm a middle-aged lady. So I have scrubs for my auditions, and that's very clearly a costume because I'm not a doctor. I just play one on TV. So I can write off the costumes of the scrubs, or I had to buy an orange t-shirt once for a Home Depot commercial, like that kind of stuff very clearly. If I had a client who got nominated for an Oscar for like best short documentary, the category no one's ever seen the movies in, but he was nominated for an Oscar and he bought a tux and we wrote it off because he wore it to the Oscars and he was on TV and then he never wore it again. It's a write-off. The clothing has to be something that you really only wear for business. If you're wearing it to your cousin's wedding and then to an audition, you kind of lose the value. Where you're wearing it to an opening night party and then you wear it to your cousin's wedding, it's no longer business. So be careful with clothing, be careful with your food and housing. Those are the ones where we know we have expenses, we want to be careful. For visual artists, clothing could be like smocks or aprons. That's different. That's very clearly work related. If you're wearing like work overalls or something like that, and because you're making messy art, then for sure. But if it's just buying nice shirts for interviews, we shouldn't be claiming those. I'm going to quickly look in the chat to see if anything else has come up that we can, let's see. Okay, so website fees, phone bill, parking, Zoom accounts. Yeah, so phone bill and internet are utilities that we don't include in home office because home office we're claiming probably a small portion of our home, whereas website and internet we're claiming a much higher percentage of use for business. So thinking about with cell phone and internet, we want to again take a percentage of this personal related and not claim that, but it's going to be a different rate than what we're going to claim our home office for. Most people are using internet like 80% for business these days, and that's perfectly reasonable. I mean, it's reasonable if you think it's reasonable. If you know that you're spending all your time on the internet downloading or like Twitch or Twitch games, whatever those people do Twitch, I don't know, Steam. Look, I am not a game person. I just heard words. But if you're gaming and you're not making money from gaming, then you can't write off a lot of your internet. Like, just applying that rule is reasonable. I do have a client who is a professional game player. Like he plays and people sponsor him to play, and that's that. And so yeah, his gaming is a business because that's how he makes his money. So for him it's different. His internet is pretty much all business because that's all he does is put a camera up and play games for people. I don't get it, but it's a business and it's great. It works for him. So what else have we got in here? Travel expenses. Travel can be great if you're going for a retreat, if you need to travel for an opening night. Remembering that the food that you travel with is its own category because you could be alone or with somebody to write it off. Getting places while you're there, baggage fees, all of that stuff. Travel is a great expense. Books, I'm 3 books in. Books can, depending on your business, books are an expense. For most people, books are an expense because there's a research element to books. If you're buying art books because you're an artist, if you're buying play scripts because you're an actor, if you're buying music tab because you're a dancer or a musician, if they're work related, books are work expense. What else have we got here? I've lost my mouse. There we go. Studio space. Studio space is obviously different from home office expense. If you rent a studio outside of your home, and it's all for business, then you should be claiming 100% business for your studio. Now that doesn't get it to go into there's a home office expense that we can claim different from a studio rent, which is a different category entirely and should be claimed at 100% business if it is an outside studio where you're making your art. Great. Like if it's a dance studio or a recording studio, 100% business. The dancers for Epsom salts. So if you are working with your body, if your body is your art form, dancers who also going to be, even sometimes with tattoo artists will claim a little bit of self body care because tattoo artists, their work is very hard on their body. If your work is hard on your body, you can claim some maintenance to your body. There are things that are going to be gray area medical expenses, and medical expenses, anybody can claim a medical expense. It's not business related. So for dancers who are doing a lot of physio and massage, it might be more beneficial to be claiming that as a medical expense in a different schedule. I do have artists who are voice artists, and so they do claim a little bit of vocal maintenance. And I think you could do the same for your body if you're a dancer, but just again, being aware that if there's a gray area and it seems like it might be partly personal, just to be a little prudent when you're claiming stuff, to not claim everything as business if part of your Epsom salts are just because on Sundays you have a bath and watch The Bachelor. I'm not using myself as a personal example there. All right, working from home expenses. What else? What else have we got? Debts. Someone asked about debts. Debts aren't really an expense because they're implied to have been a prior expense that you haven't paid off yet. It's a really interesting question to say debts. There are ways that debts can be an expense, and that would be, this is complicated, so bear with me. We talked about the accrual method before where we claim the income when we did the work as opposed to when we got paid. So say I did some work in December and it was $500 and I claim that income on my 2021 tax return, knowing that I'm going to get paid in January 2022. And then I never get paid for it. There's a debt that I can claim because I've claimed the income, assuming that in good faith that I'm going to get paid, and I never get paid for it. I get to claim the expense of that debt the next year. Because I've already paid tax on the income, I get to reverse it. But that's the only place where debt really comes in. The other example of where debt could come in is if you have like a business credit card, business dedicated credit card or line of credit, and you're paying interest on that business expense, and the interest is claimable. But otherwise, debt is basically expenses that are still sitting around from a couple of years ago. So I bought an expensive camera and I've been paying it off for 10 years. I've already written off the cost of the camera 2 years ago. So the debt is just sort of what's left over, but I've claimed the camera. I hope that helps LM understand what I mean by debt. We can talk about it more in the question and answer period if we're not clear on that. Accountant fees, absolutely. Accountant fees are a great expense. Consulting fees, if you were to pay for this workshop, you'd write off the cost of this workshop. The cost of your QuickBooks or your FreshBooks and whatever, those kinds of things are great expenses. Membership fees, so that would be memberships with if you're a member of the gallery, like Mercer Union or something, or you're a member of the dancers umbrella, or you're a member of the actors, ACTRA Toronto, Actors, Screen Actors Guild, any of those, they're professional associations that are great expenses because they, again, prove that you are a professional or you have an intent to be professional. Shipping fees are a good expense if you're shipping your art, absolutely. Cameras and insurance. So insurance is going to be, if it's related to like business liability, absolutely, 100% claim. If it's related to your home or your car, we take a portion based on your personal use and your business use. Portfolio website plans are absolutely an expense. One of the things that I saw most missing from the list that we had brainstormed is advertising expenses. And advertising expenses are really important because it's one of those things that can show to the government that you have intent to earn a profit, to advertise your business in order to make some money. I have some clients who are lovely artists and they teach their art form, like they're successful artists because they teach their work. They don't make a lot of sales. And every year I'd say, like, we need to get some sales going. You're not going to get allowed to do this any longer. The government's going to get grumpy. And finally one year I said, where are you selling your art? And they said, oh, well, it's at a gallery, but it's just in a drawer. Like no one really knows that it's there. And I said, you can't be in business if you're not trying to sell your art. If it's just in a drawer and no one sees it, it's not a business. we had to talk about that because they weren't trying to sell their art. They might have been in a gallery, but they were in a gallery and people saw it. So they weren't really trying. And you need to try. You need to make some effort. There was a couple of suggestions here of like cameras and computers and equipment and that kind of stuff. So when it comes to big ticket items, and by that I mean it costs more than $500, $500 or more for an individual item. So a camera, a computer, buying a cell phone outright. Those are what we call an asset. They have value beyond the first use. So they don't get to be written off in one go. They have to be depreciated, which sounds like fancy accounting, and it kind of is. And it's where you maybe want to have an accountant, because the value of the easiest way to look at this is if you've ever had to deal with an insurance claim and the insurance agent wants to know like, what was the value of what was in your house? Well, the computer that you had in your house, if it was something that was to happen, had value. That's how depreciation works. There's cash value to my computer that's in my house. So I can't write off the entire cost of buying the computer the year I buy it because there's still cash value associated with this. I could still sell my computer tomorrow and make a couple $100, and that's great. So when I'm dealing with something that is an asset, has long-term value, and if we think about what would happen in a fire, that was something that I would want to replace, those things have to be depreciated, which means they have to be carried, they have to be claimed in small amounts year over year. And it's complicated, and I'm not going to get into it too deeply, but just know that when you have a big ticket item purchase, you cannot write off the cost of buying a computer in one go, unless it really costs like $200. If you're buying a big ticket item, you need to depreciate it, and that requires a bit of fancy math, which I would encourage you to talk to an accountant about. Or if you don't want to see an accountant and you want to do your taxes by yourself, know that the Canada Revenue Agency, CRA, they have a call center. It is pretty hard to get through to them in April, but if you call them in the off season rather, you can get through to them, and somebody there can walk you through how to do something for free, because that's why we pay our taxes. We have this call center and they're there to help you. And if the person that you're talking to isn't very helpful, you just hang up and call back, you'll get somebody new. But if you call in April, you'll be on hold for 3 hours, so just bear that in mind. Other expense, what else have we got here? This was some good co-working spaces, absolutely. Uniforms, we talked about clothing. Uniforms are going to be careful. You got to be careful with your uniform. If it's for a day job, like your waitering uniform, no. If it's for paint coveralls, yes. Just use your common sense when it comes to that. Paying collaborators, 100% great business expense. We've talked about pretty much all of this. Production costs, payment processing fees, and subscriptions. Yeah, so payment processing is that example that I gave of like paying PayPal to take the $3 to sell your shirt. That's a payment processing fee. We claim those expenses. Art supplies, absolutely, and materials. Adobe Creative Cloud is an office supply. It would go into your office supplies. Let's see, what else have we got? Co-working. I think we've covered most of what everyone brainstormed here. Client will travel, Zoom accounts. That's a great expense these days. Zoom, yeah, promotional tools. Great. A portion of what? The strong portion of rent. Jackson's going to ask later. All right. Just make sure I'm not missing anything. Sorry, this is probably the most boring part of the meeting as I stare at my computer. Training and workshop expenses, that's a good question. Can workshop training expenses related to your industry be written off? And they can. I take acting classes and improv classes on a monthly basis, and I use them as training for my business, so I write them off. So as all of this stuff goes, we need to make sure that we're applying the rule of what's reasonable. Is it reasonable for this to be part of my business? If me as an actor was to take a dance class, but I have no intention of ever being a dance performer, I wouldn't write it off. It would be a hobby, because I'm taking dance for fitness. So you have to, again, apply the what's reasonable. Does it actually make sense to you? All right, there's a lot of stuff here, and we're going to be moving into the question and answer period soon. So I'm going to stop looking at this, and we'll talk. We'll just do a quick summary. I think most of what I've got here is reflected in what you all brainstormed, but keep in mind that the things that are important, that are more important to highlight, are going to be things that are advertising or professional memberships related. When we're looking at if we have very little income and we have a lot of expenses, it's not always worth running a big business loss, because that can open us up to the idea of being audited or being examined, being deemed a hobbyist. So if we're looking at our expenses and we're not sure about something, we want to focus on the expenses that feel the most like we can demonstrate an intent to earn a profit. That means that oftentimes food, those meals get ditched because they're not as important as the cost for my website. So keep that in mind when we're tailoring our expenses. If we need to be fussy and not claim everything, bear in mind that stuff that looks more business, less personal is the best way to go. You want to tweak your expenses to high business function. All right. I think next one is going to be HST, because there was a lot of questions about HST in the questions that I got in advance. HST is scary. It seems like a threshold people are not always ready to jump over. And so hopefully we can demystify a little bit of that. So when we get an HST number, it is we individuals with our SIN numbers who are getting the HST number. So some of the questions here were like, I do two different things, and where is HST? So me, Tova, as an individual, everything I do is freelance, and I do tax, and I do acting, and I used to do cater waitering. But me, Tova, with my one SIN number, had an HST number that covered all of my work, all of my freelance work. So when I was working as a cater waiter, I would invoice my boss, the owner of the company, with my HST number, and I'd invoice my agent with my HST number, and I'd invoice Artbooks with my HST number. So one HST number to rule them all, basically. It was one HST number for all of my work. HST, the way that the department works, and this is a department that's different from the tax department, is they want you to be keeping a track of your freelance income only. And when you come close to $30,000, you call them and you get the number. Phone numbers on the screen. You can do it online, but I find that when you do it online, it somehow never takes. People will do it online and it doesn't actually exist. It's like a weird anomaly. So doing it on the phone is the easiest way to do it. It takes 2 minutes. They love giving you numbers. But basically, it's up to you to track your income. They want it quarterly, so that any four quarters, if you were to make $30,000 based on the quarters of like September through March, then you need to get the number in March. I tend to stick with calendar because it's just easier for my brain to go calendar. But keep track of your income. And if you think in any way that you're close to making $30,000, you call and get the number right away. When you don't have a number and you miss getting the number and you've forgotten about doing it for a couple of years because life, or you just didn't know and you missed it, the CRA can communicate with you. They can come to you and say, we've been reviewing your tax returns. You should have had an HST number 2 years ago. So we're going to give you one retroactive to 2 years ago. And what they're saying to you is that you're now on the hook for 2 years of HST that you did not collect. And that happens more often than I would like to see. It happens to people who then have to go back to people they haven't talked to in 2 years and say, remember that job I did for you in March 2020? Should have charged you tax. Can you pay me for it now? And that's just not a situation that anybody wants to go through. So you're really, really want to be careful that you're very, very cognizant of where your income is. And if you think you're anywhere close to $30,000, get the HST number. I got mine well before I'd hit $30,000 because for me, as a finance person, it made me look more professional. So I got my HST number purely for optics. And now I need one. But when I got it, I wasn't making any money, but I looked like I knew what I was doing because I had an HST number. So I got one. You just don't want to miss the deadline. You don't want to miss the boat on getting one because the HST department is just a bit more punitive than the tax department. So tax and HST departments don't necessarily talk, but the HST department will be scanning freelance tax returns for, there's one line 139, I think, where it'll show your gross revenues. And that's the $25 from the t-shirt, not the $22 from the t-shirt, it's the gross revenues. It's what I make selling my work. They're scanning that, looking at people who've made more than 30. Now, that 30 encompasses a few different amounts, can encompass a few different amounts. And one thing that 30 does not include is grants. So grants aren't part of the $30,000. If all of your income is grants, you don't have to have an HST number. you might want one. We'll talk about that in a minute, but you don't have to have one. I had a client who definitely made more than 30 with grants for a number of years. He was a poet and he got some nice grant income, and the CRA gave him that HST number. They gave it to him retroactive 2 years and said that he made a lot of money. And he called and said, it's all grants. And they were like, oh, okay. And they took the HST number away. So if it's grants, it's not subject to the HST threshold of $30,000. And so there is income that is HSTable. There's income that is zero rated, and there's income that is exempt from HST. So there's 3 different areas of income. Income that is HSTable is just me in town selling my t-shirt to another person in town. So I go to a craft fair at City Hall and I sell my shirt for $25. I would charge them tax. Whether I charge them cash or not, I charge them tax. Straightforward transaction. I go to McDonald's, I buy a hamburger, they charge me tax. It's straightforward. HSTable income. Fees for goods or services. Exempt from HST is grants and surprise money. So somebody had a question earlier about honoraria. Honoraria is taxable income, but if honoraria is genuinely surprise money, it's also exempt from HST. A lot of organizations will call it an honorarium to avoid paying HST, but if they've agreed with you in advance, they're going to pay you an honoraria, and it is no longer surprise money, then they should be paying you HST, because that's the rules. Not everybody will. HST can be tough to collect, but our job, if we have an HST number, our job is to tell everybody we have the HST number and get it from everybody. You gotta just ask for it. If you don't ask for it, you're not gonna get it. So just telling everybody, you know, got an HST number, give me my HST. That's, you gotta blanket the city, the country with your HST. So grants are exempt. Honoraria, if it's a genuine surprise, is exempt. Honoraria, if it's agreed in advance, should not be exempt. And then there's zero rated. And zero rated means, and this is just weird wording, but zero rated means you charge them HST at 0%. And where that comes into play is with foreign entities. So I do some work for an American company. I would charge them, my invoice would say $500 plus 0% HST. And why that's the distinction there is because the zero rated income is part of the $30,000 and the exempt is not. So the zero rated is, I'm still selling a good or a service. I've provided my services for $500 to an American company who doesn't pay HST. They pay their own American tax. We don't pay that. So they don't pay Canadian tax. We don't pay American tax. I don't charge them 13% tax. I charge them 0% tax. But that income that I've made is part of the $30,000 that I'm looking for when I'm wondering if I hit the threshold. So if you are looking at your threshold and you're doing a lot of work for a foreign company, American, British, and you're invoicing to a foreign address, that income is part of the $30,000 math you're looking at, but grants are not. So those are some key distinctions that you want to be careful of. So once you get the HST number, you have to charge HST all the time, whether you're making $30,000 or not. People will say, well, I had a bad year. I didn't make 30, so I didn't charge tax. That's not how it works. The day you get the number is the day you charge HST going forward on anything freelance until you stop being freelance. So you don't charge HST on your day job as a waiter. You just charge it to your freelance work as a choreographer or when you're selling your art. But the minute you get it, you charge it for always. It's something you're just locked in. Now, there are 2 ways of doing your HST. There's the long or regular method and there's the quick method. Most people, 90% of people that we deal with, we're going to do just the regular or long method, which the math just goes, I charge HST, I give it to the government, I spend HST running my business, I keep it. I give the government the difference. So in this example, I've made $30,000, charged about 13% tax, I've collected $39 of HST. But in the course of running my business, all those expenses that we just brainstormed, a lot of those expenses are going to have HST tucked into them. That HST comes out of the expense, goes on my HST return, and I give the government the difference between what I collected and what I spent. So I give them $2,600. I get to keep my HST that I spent tax-free in my pocket. So having an HST number, even if you don't need the number, can be beneficial, especially if you're spending more money than you're making. You can actually get HST refunds, but know that with these days with HST, if you're getting refunds consecutively, they will audit you, and that is a guarantee. So HST audits are not as bad as tax audits, but they are a pain in the butt. So if you're perpetually getting HST refunds, know that there is a good chance you'll get an audit. So HST that you spent, it's just a matter of, I bought a pen for $1, there was 13 cents of tax. 13 cents of tax is now part of my HST return as opposed to my tax return. So if I don't have an HST number, I'm going to write off $1.13 for my pen and tax, and my tax return is an office supply. So if I don't have the HST number, $1.13 is my expense for my business. If I have an HST number, the $1 for the pen is my expense for my business, and the 13 cents is the expense for my HST return. And they get divided up and used in different places. So we cannot claim HST as an expense on both of our returns. If we have the HST number, the HST comes out of the expense of the pen or the computer, and it goes onto my HST return. So the more expenses you have, it can be quite beneficial to have an HST number because you get to keep a bunch of the HST you collected. Just know that a lot of expenses that we have these days don't have HST because we're now dealing so much with online services, and if they're foreign entities, there's not a lot of HST being charged. Netflix just started charging us HST, I think last fall. iTunes started charging us HST a couple of years ago. Adobe charges us HST in US dollars. It's very confusing, but not all of these online services are going to charge us HST. So it's not a blanket math of here's all my expenses, HST and everything, I get to keep it all. You want to be careful when you're looking at your expenses that you're only collecting HST or calculating HST on the expenses where HST exists. So things like Vimeo, Vimeo doesn't, if it's an American company or a UK company, they're not charging us tax unless they're so big like Netflix that they have Canadian tax obligations. So that's regular HST. It's the most common one. It's used for people who have a lot of expenses. If you have high income and not a lot of expenses, you could benefit from the quick method. Quick method is just, it's less math. It's just basically I make some money, I collect some HST. I'm going to give the government an assumed amount of 8.8%, assuming that's going to cover my HST for the year. So instead of having to collect all the 13 cents of HST I spent on my pens, I just give them 8.8% of all the money I made plus tax. So you can see the math here is I made $33,900. That's the income plus tax. I give them 8.8%, which is just under $3,000. When we've made more than $30,000, we get to keep an automatic $300 back. Plus, if I bought a computer or another asset, the HST on that, I give them the difference. So in this example that we have here, the quick method, you end up getting to keep, you pay less HST. But with quick method, if you're on quick method, the money that you keep is taxable. So this person would have to pay tax on an extra $1,500, unlike the long method person, they wouldn't have to pay tax on what they keep. So there are pros and cons to both. And if you have an accountant, you should talk to them about the best method for you because it's really specific to your income, your thing. It's not you should have somebody who knows your numbers pretty well to determine what the best method for you is. And quick method you need to elect to do. You need to fill in a form and send it to the CRA, electing to be quick method. You can't just change it up and be quick. You've got to ask to be quick and they have to approve it. So we're doing a long Q&A session, and so I'm going to do another quick 5-minute break. It's 3:57 now. We'll come back at 4. Let's just do 4:05. Do a quick pee break, get a cup of tea, and then we'll do Q&A. I'm sure there's a lot of questions because there's just a lot of information to take in. So go do a quick foot stretch, and we'll see you back at 4:05, and we'll do some questions. We still got a minute, so I'm going to wait for everybody to come back. Those that haven't given up on tax, because we all know tax, not very interesting.
Tova, there's a couple of questions. Also, thank you for everything so far. I've been learning as well so much, so really, really appreciate the thoroughness. We've been compiling a couple of the questions that were kind of missed in the chat earlier on. So maybe what we can do is we can read those out and start with those, and then if there's people who still have other things, I see that people are putting in slowly, but we can begin with those.
Let's we will just take some videos. I'm ready for you. Go for it.
One thing before we begin, also Philip here speaking, just a couple of quick accessibility reminders as we go into this Q&A session. If you do find yourselves unmuting your mics to speak at any point, if you could do your best to first state your name and ensure that you're speaking slowly and clearly and ideally moving closer to your mic to speak, that would be extremely helpful. So please keep that in mind. All right, I'm done speaking.
Okay, should I read the questions out, or does anybody else want to do it? I'll do it. All right. First question is, do you have tips on where to find an accountant that is affordable?
It's complicated because accounting is not the cheapest thing in the world, but it is a good investment. So I find that I see people usually crowdsourcing on Facebook looking for accountants. Artbooks is pretty standard in their fees. It's like saying it's not cheap, but it's a good investment in your business. If you have an intent to run a business, checking out a couple, most people will just toss it on Facebook and say, who's got an accountant? And then you can find various options there. I found my accountant by asking my old boss, and she's now somebody whose taxes I do. So my old boss was at a theater company and she was the prop builder there, and she said to go to Artbooks, and now I do her taxes. So asking your friends, asking your peers, depends on really what you want in terms of a service, because there are some services where they just say, like, here's a Dropbox, pop it on the Dropbox, we'll call you in a month, and they don't talk to you. Artbooks is an appointment-based service where you get an hour and a half face-to-face with your accountant, and you get to talk about your business. So it really depends on what you want. Not everybody wants to sit and talk to me for an hour and a half, but those that do have a great time, because boy, I'm fun. I would say if you need to find an accountant, crowdsourcing is probably the easy way to do it.
Thank you.
Yeah.
All right, so following question we have here from the archives is from Amelia. So as an artist academic, I pay membership fees for my discipline's associations. I'm wanting also to write off books as research expenses, but I'm not sure if I can.
It's a good question. And sorry, is there more to the question?
They just specify that they're employed by the university and get scholarships.
Yeah, it's a good question, and it's a tough question to answer without sort of seeing Amelia's numbers. But the bottom line is, if the expenses are related to something that is not it's a gray area where if I'm studying the thing that I do as an artist, there's some overlap and there's some gray area. But if it's related to school, I'm not allowed to claim the expense elsewhere. If it's school related, it's a personal expense. And we get credits when we pay tuition to a post-secondary institution. Say I go to York and I pay tuition there, I get a form called a T2202, which states how much tuition I get. When I enter that on my tax return, I get an automatic credit for having paid for school for books. So there's like a book credit and there's a time and school credit that we get as part of our federal tuition credit. So we get credit for that within our tuition credits that we're calculating. So if it's school related scholarships and tuition school books, you cannot claim them on your freelance practice. It's just bad practice. You want to keep that stuff separate to the best of your ability. And I know that that's hard because there can be gray area, but you want to trust your integrity to pick the right answers for how to navigate that.
Awesome, thank you.
Yeah.
All right, other question here from the archives is, I think this one was answered, but can workshop training expenses related to your industry be written off? Examples that are specific are Spotify and Netflix. So subscriptions.
So for me, like as an actor, I write off Netflix because I'm on Netflix shows I need to be watching to research the tone of the work that I'm going to be auditioning for. So for me, it's very much a business expense. For me as an actor, Netflix is a business expense. For a visual artist, Netflix is probably a really bad business expense. So it has to be related to your business. For musicians to be writing off Spotify, yeah, because it's researching other music. Of course, Spotify we now know is evil. I don't know. Do we like Spotify? But yeah, if it's related to your business, it should be allowable. I don't write off a lot of books anymore. I used to be a writer and I wrote off books because I was a writer, but I don't write anymore. So books are not really part of my thing, but Crave is part of my thing. What is part of your thing, and how does research fit into you? So however you're researching, if it's related to your art practice, research is always a reasonable and valid expense.
Thank you.
Yeah.
Another question regarding this is professional headshots. Would that fall under advertising?
Absolutely. 100%. Yeah. Good expense.
Cool. I think this one you responded to about if you run two companies. So if you're a working musician and self-employed.
Yeah. If they're both being treated as freelance, you can run two business on your tax returns, but it's just a bit more admin work. My example that I gave, which is when I started out doing tax, I was also doing catering and I was doing acting. So me as an entity had 3 different wings of the business, but they were all one tax return. They were all one income statement because it was just easier for me to be like Tova's income, Tova's expenses. And part of the reason why I still do that is because my acting pays so little. It's a business that if I was to give it to the government every year, they'd be like, this business is failing. It's failing, it's failing, it's failing. I'm always running losses. But when I add my freelance tax practice in, my business is always succeeding because my expenses are high for acting and my income is low, but my income is high for tax and my expenses are low. So together they make a business that looks reasonable, and separate they would be different. There'd be a lot of highs and lows. So when you are a person with like one SIN number, I am a freelance artist and I do a bunch of things, then I'd say it's one business unless you really want to separate it out.
Cool, thank you.
Yeah.
Following question is, there's 2 parts. For food, what about purchasing snacks for a job? I'm not sure what this means, but yes, that's the first part.
So part 1, that's generally a bad idea. So you have to either be you really have to be feeding somebody or being with someone to talk about it. So I work from home and I'm entirely 100% freelance and I buy cases of bubbly water. That's my snack. I live really on the edge here with my bubbly water habit. Would never write it off, even though I drink it at 4 o'clock every day while I'm working. It's just not a business expense. But I would go out meet a client for coffee, yes. But if I'm going on set somewhere and I buy a stack, it's again not a business expense. You really have to be spending the money. We'll go back to the person who asked that question. The thing we talked about was food is not a great expense. When there's a biological imperative, you want to be reasonable. So if you're being aggressive with food, you're not doing a good job. You want to be reasonable with food, and snacks for work are not. If you have people over, if you have clients over and you give them a cupcake, great. Cupcake for the client, but cupcake for you while you're working, no, as much as we like cupcakes.
Thank you. Next one, do you get an HST number based on if you make 30K? Oh, whoa. Do you get a HST number? Oh, sorry, I'm having a hard time with this one.
I saw that question and it was a good question. So I'll repeat the question. They were asking about whether the HST of the 30,000 was gross or net, meaning when do you figure out, when you're looking at your 30,000 to figure out when to register, is it before or after expenses? So the HST $30,000 is before expense. It's just adding up your invoices. What are my invoice totals? If it's 30,000 from before expenses, that's when you want to get the HST number. And I'm sorry I wasn't clear about that earlier.
Thank you. Next one is, could we talk more about writing off an expense? Once you have the receipts and Excel sheet, what do you do with that?
Well, you either go to your accountant and tell them about your expenses, or you do your taxes with that document that I showed, the T2125, which is if you're doing them yourself, you'd be filling that in. So we report our income, and then there's a place to report our expenses, and that gives us our net income, which is what we're paying tax on. So our gross, which is everything we made, minus our expenses, which is everything we've added up, gives us our bottom line, our net income, and that's what we're paying tax on. So we, as freelancers, are adding up our receipts to lower our gross income to a net income that will be lower, we'll pay less tax on.
Thank
I don't
you.
mind taking over the Q&A, Alexia, if you want.
Yeah.
So the next question we have here is a three-part question. So I'll just go one by one. Question one is, why do people invest RRSP before tax return?
So I think what the person is asking is about why we're being encouraged to put money into an RSP right now before we do our taxes. I think that's what the question is. We don't, because we don't do RSPs before we do taxes. They're sort of separate. But basically, the rule with RSPs, and RSPs, it's a good question to ask. Why are we doing RRSPs? We just talked about what gross income is and what net income is. When we're doing our taxes, we're being taxed on our net income, but RRSPs function to lower our net income by the dollar amount we put into the RRSP. So say I did all of my amazing math and I got my gross income, and then I threw all my expenses in, and say I made an amazing year that grossed $100,000. Wouldn't that be nice? And then I had some expenses and they were like $20,000. So I'd be netting $80,000. If I netted $80,000, I would be living with a lot of my income in the second tax bracket, to be paying extra tax over $45,000, paying the second highest, that's another higher tax bracket. And the way to change that, to reduce that, is to put money into an RSP. And so say I have that net income of $80,000, I know I'm going to be paying like higher tax on $30,000 of that income. If I was to put some money into an RSP, say like $5,000, all of a sudden my net income is $75,000. So I reduce my net income by the dollar amount that I put into my RSP, and that will reduce any income that I'm paying in the higher bracket so that I'm paying less money in the higher bracket. And that's the goal with the RSPs. So the RSP contribution period runs from March of one year to the end of February of the next year. And the reason that is because we have 2 months after the end of the year to go, oh shit, I made a lot of money. I should put some money in RSP to lower my income. So people will mad scramble in the next 2 weeks, put money into an RSP because it'll help last year's taxes if they've made more money than if they've made a lot of money, trying to lower that income. So the trick with RSPs that really is helpful is reducing income in higher brackets. So if we've made $50,000 net and we have $5,000 to put into an RSP, we'd exactly be putting enough money in to reduce our taxable income to the bottom lowest bracket only. We wouldn't pay any of the higher bracket income because we've put enough money into the RSP to lower it to that nice lower bracket. So that's why we have the RSP period now. We get that gift of 2 months into the next year to help us with last year's taxes.
Got you. Great.
Yeah.
If my small business name is different than my self-employed name, can I still claim as self-employed income?
So I saw that question and I didn't really understand. It's a little confusing. Maybe the person who's asked the question can elaborate a little bit if they're out there.
Yes, it was Francesca.
Hi.
Hi, Francesca.
Hi. Yeah, hi Tova. I just want to ask because my business name is not my first and last name.
Mm-hmm.
It's called Artbooks, so I wasn't sure if I can claim it as like my self-employed business.
Well, how have you been doing your taxes so far? Or is this your first year?
Yeah, it's my first year of business. Yeah, that's why.
So your business name, did you incorporate it or did you leave it as a sole proprietorship? Or where is your business name? Has it been registered anywhere?
No.
It's just I mean, I have a business name. It's called Permanently Cranky. It's just a name that I throw around, but it's not official anywhere. Mm-hmm. So it doesn't matter because it's just still me. Like it's still me. I'm permanently cranky because I am. So I'm still doing Tova Epps tax return. and the name of my business doesn't play in because it's still just me and my SIN number. So if you haven't done anything fancy to, like if, Francesca, what do you do?
Oh, full-time or side?
Well, you have a business name. So what does that business do?
Oh, so that's my Etsy store. So I sell like just products.
Cool. Yeah, yeah. So it makes sense that you would have a name for that. But if it's not tied to anything, then it is still just you and your SIN number who's making that money.
Mm-hmm. Okay.
So you would still be, it would, at the end of the day, the business name is like a bit of costume dressing on your personal taxes, where you get to claim the income for the shop and the expenses for the shop as you.
Okay. Okay. Thank you so much.
No problem. Well, there's one more question in there, right? There's 3.
Yes. If my artwork was sold in the US, do I still claim the tax as Canada?
My artwork was sold in the US, do I still claim the tax as Canada? Do you mean, Francesca, do I still claim the income on my Canadian tax return and pay tax on it in Canada? Or
Yeah, that's what I mean. Like, do I have to pay US tax or?
So it depends on your residency for tax purposes. So as Canadian citizens, as Canadian tax filers, if we are resident of Canada for tax purposes, we have to pay tax on worldwide income. So if we make money elsewhere, we have to claim it on our Canadian tax returns. If we are a resident of Canada for tax purposes, doesn't matter where you make the money, you pay tax on it here. If you've already paid tax on it elsewhere as well, you get a credit for having paid tax on it already. So as a Canadian, if you're just selling to a bunch of American, like you have an Etsy shop, so somebody in Buffalo bought one of your t-shirts, it's still taxable if you're Canadian, as a Canadian, because the store is Canadian. Your shop, your Etsy shop is Canadian. Doesn't matter who
Right.
you do.
Okay.
Yeah, but if you were hired by an American, like you went to the States and you moved to the States for 6 months, you could change your residency rules, but that's complicated and not part of it. It's not a best part of the use of this time. We want you to talk to an accountant about tax.
Mm-hmm. Mm-hmm. Okay.
Does that answer
Thank
the
you so
question?
much. Yeah,
Great.
that helps. Thank you so
Super.
much, Tova.
Okay.
If at any point, Tova, you need like a 5-minute break as well, please just let me know.
Having my bubbly water and everything's good.
Okay, great. Next question. Do you have any information about getting taxed on EI? Seems inappropriate. They can tax you on already taxed income.
Well, the thing about EI is that they tax you very lightly. They tax about 10%, and we tend to pay 20%. So you will end up paying tax on your EI. It's just the nature of EI. It doesn't always feel great, especially when people are getting EI for mat leave and they come off of mat leave and they owe tax, but that's the nature of EI, and you just got to pay it, unfortunately.
Great. Next question. What tips would you give in filing out an W8-BEN? What lines should be filled out? Do you need an ITIN? Question.
Okay, so for the sake of everybody else, this is questions about American tax forms, and it's not really part of this seminar, so I don't want to get into American tax issues too much because it's complicated. ITINs are a good thing to have. They're not easy to get anymore. You usually have to like deal with the IRS directly. So the person who's asking this question has some American income. A W8 is not a complicated form to fill out, but I can't go through the lines with you right now. I would ask you to, you can I would say Google the IRS and Google IRS W8 and try to find some samples. And getting an ITIN is the same thing. People ask me about them. I literally Google ITIN IRS. You used to be able to call and get it, but now you've got to hire a broker to get it. If the person that's asking this is doing a lot of work in the States and having a lot of high tax withheld in the States, getting an ITIN is going to be really helpful. That's all I would say. But the nature of this seminar, I would say that you have a complicated situation, and having an actual meeting with somebody might be better, or to call the IRS and get some help, because that would be free. Those are complicated questions.
Great, thank you. Next question, what is considered low income? Someone said below 20K per year, you don't need to file taxes. Is it true? Also, where would you put ODSP? Does it count as income?
Okay. You always got to file taxes if you have income. So it doesn't matter how little you make. If you have money, you gotta report it. That is our job. That's what I talked about earlier about Al Capone and fraud. If you make money, we got to report it. Because if you don't report it, that's the whole thing about maybe the person logged in late, leaving money on the table when you file your taxes. If you've made no money, you're still eligible for all those non-taxable benefits like the climate action credit and the GST credit. So filing taxes it's good. If you've made, it's just worth it. Low income, to define low income is really hard. I think that the CRA's idea is about 24,000 for an individual. But low income in Toronto is like 40, right? Because you can't afford to live here. So low income has a lot to do with where we live and the cost of living and where we live. So I can't define it, but I think that the CRA's general idea that is about 24,000. And you need to file your taxes if you've made income. Now, ODSP is not taxable, but it is reportable on a tax return. Somebody had written a question about ODSP and in the pre-question. ODSP is really complicated and I'm not an expert at it. And I know that it's very hard and very frustrating to negotiate with ODSP, and I apologize. I'm sorry to the person who's dealing with them. You do have to report it on your taxes, but it's non-taxable. It's the way it would look on a return is that you'd see the money come in the income section, and you'd see the money come out in the credit section. So it goes in and then it goes out. So you don't pay tax on ODSP, but you do have to report that you've made the ODSP.
Great.
Yeah.
Next one, are accountant expenses tax deductible? I believe this was answered, yeah.
And they are.
Great.
Double thumbs up for that one.
Next question, what happens if you collected HST on your product, but don't have an HST number / you don't need one yet, ?
Okay. So the basic rule is you can't charge tax if you don't have the HST number because the CRA considers that fraud. There's only a couple of ways where there's fraud, but that is the thing. If you don't have an HST number, you can't charge people tax because you're not allowed to. So the way to deal with that is if you charge HST in error, you can return it to the person who you charged it to, or I've heard that you can just add it to your income and pay tax on it as taxable income. Either way, the money has to be dealt with ethically. So either by returning it to the client or paying tax on it. The HST is confusing and it's a bit fraught. People get really frightened of it, but there's they have a call center too that are really, really helpful. And the number I posted earlier is available and I'll just put it in the chat. But if you're worried about HST and you think you've done something wrong, you can call anonymously. Why is that not, oh boy. Typing is hard for me today. 525. So this is the HST department that I've just posted. If you have any worry about it, call them because they're nice and you can call anonymously, block your number. They don't even know who you are to answer generic questions. But don't charge tax if you don't have an HST number. That's just the bottom line. I worked as a bookkeeper for a company where one of their vendors charged them HST for 2 years, a total of $14,000 that he charged in HST. That he was pocketing. He wasn't claiming it as income and he wasn't giving it to the government. Basically, he was committing a huge amount of fraud and the company that paid him the HST was in trouble too. So it is considered fraudulent if you're charging tax without having the HST number because basically you could be just keeping it and defrauding people. So don't do it. And if you did it, you can fix it. Give it back. Just give it back.
Great. Thank you. How important is it to separate a business bank account to a personal bank account for daily business expenses and business income?
It's a good question. I don't have a business bank account because business bank accounts cost $20 a month, and I think that's bullshit. So I don't have one. I'm also able to, in my head, kind of shuffle the money around, and I use savings accounts to deal with my income. You don't have to have a business account if you're not incorporated. If you're incorporated, you have to have a corporate account. But if you're just a sole proprietor, you can have a business account or not. It's entirely up to you. If you have a business bank account, the fees that you're paying monthly, you can write off. But just, it's not worth spending money to have a write-off. So if you're going to spend $20 a month on a bank fee, $240 a year, and you write it off, it's going to save you $30 in tax, right? So you're going to kind of further behind by having a business bank account, unless you really need to keep that money separate. If you cannot in your head go, not my money, business money, personal money, if you can't do that, getting separate accounts is good. But if you can kind of go, no, not my money, I use tax-free savings accounts to separate my money out. So when I get paid to save for tax, I just take 33% of my check, and 33% of my check is 20% for tax and 13% for HST. I take that third and I stick into a tax-free savings account every time I get paid, so that I know that the money in my account is my money, because the money that I need for tax is tucked away, and I'll pay the government when it's time to pay the government. So I don't think you need a business bank account, but there's no reason not to have one. It just costs more money.
I can take over Nat for questions now.
Thank you.
Sip of water. So Julia here asks, for a music composer earning much of their income from licensing/royalties, so i.e. not things that they're invoicing for, how does the HST threshold and collection work?
It's a good question, and it's a tough question. Royalties and HST is pretty complicated. The rule, the broader strokes of HST and royalties are, if you did the work before you had the HST number, then the royalties collected from that work is HST exempt, because the income is residuals of work that was done before you had the number. If the work was done when you had the number, then you would collect HST on all of your royalties, but only royalties, Canadian royalties. So it is complicated, and it really depends on how you're tracking things. SOCAN, who are a royalty collector for Canadians, they collect and remit the HST on your behalf. So if you're getting royalties from SOCAN, you don't have to worry about the HST there. That's been handled by SOCAN, which is a bit of a gift because it's complicated. If that person is still on the chat, maybe they can just give me some examples of what kind of royalties they're talking about, because that might be helpful.
This was Julia. I'm not sure.
Yeah. Hello. Hi, thank you.
It's for Rob, the music composer.
Yeah, I'm just, SOCAN was definitely one, so that's good to know that they collect it, as you just said. Also, companies like the distributors that I use to get the music onto the digital platform. So CD Baby is an instance of one of them, or AWOL, or a couple of the names.
Sure. I mean, CD Baby is American, right?
Yeah, they are.
Yeah, so they wouldn't be collecting HST for you unless they're doing streaming in Canada, but you should talk to them directly. Like they should, if CD Baby is pretty big, and they should know about the tax rules of the different countries they're dealing with. So if you're ever in doubt, talking to the distributor is the better thing to do, is just to say like, hey, I'm Canadian, I have an HST number. What are you doing about it? It's really hard with musicians, with authors who are selling books world, like where does the HST go? So getting the people that you're working with on your side is your first step. So for book writers, for authors, it's going to be getting their publisher on side and be like, this is where I'm at, and they can help you figure it out. And for musicians, it's going to be talking to the distributors for sure. So I would say talk to your distributors. If there's Canadian only institutions, you should be collecting HST, but if it's worldwide, you might even have to end up just sort of going like, if CD Baby gave me $5,000 last year, estimating how much of that was Canadian sales and doing some rough HST math, assuming there's HST in that number, but that gets a little complicated. So talk to them first and see if they have any provisions in place for your HST.
Okay, cool. Yeah. And then just to further the question, if it's like working with a publisher, a Canadian music publisher, who is essentially, they have my music in a catalog, let's say, and it gets licensed through them. Do you know if they would be collecting the HST on their end? And
but I only collect it if you tell them you have the numbers. So if you're not telling them that it exists, then they don't know about it. So that's where that whole, like, you have to just tell everybody you have the number. You got to sprinkle the HST everywhere and then see what they say.
I see. Okay, thanks.
No problem.
Next one is from Ruth. If there was an overlap over my CRA payments and a one-time payment for my corporate business, how would I file this tax? Or is my personal tax, i.e. EI unemployment, separate from my corporate business income?
Yeah, so you have an incorporation. Your income from your corporation is different from your individual, but I'm a little confused about the overlap of a corporate payment in CERB. Is this person saying that they have a corporation and they took some money out of the corporation to pay themselves at the same time as they got CERB? Is this person available?
I think there's here. Yeah.
Yeah. Hi, I'm Ruth. So my question is, there was a period of time where I was receiving EI, unemployment income, and then I performed a business where I got paid during the same time I received an EI unemployment, but it wasn't for me. I didn't take it out of my corporate banking account. It just stayed in the corporate business account itself. I was just wondering if I need to file a tax under that. I'm just confused.
Yeah, that's a confusing question. Because file a tax, what do you mean when you say file a tax?
Would that income be considered as a personal income, or would that income just be solely directed to my business?
If the money only hit the corp and didn't come out of the corp, then it's corp income and not your income.
Okay. Yeah, that's all I needed to know.
Yeah.
So as long as I didn't touch that money itself, as long as it stayed in the business bank account, I don't need to file it under because if I'm receiving EI, then I shouldn't have received that EI if I received income, right?
Correct. Now you have an incorporated business, correct? Ruth, you have
Yes.
Yeah, okay, yeah. So I would be careful to be receiving income from the corp and EI, but they're not attached. So
okay, amazing.
Okay, yeah.
Okay, thank you so much.
Yeah.
All right, next one. Thank you. I think you responded to this, but do I have to do separate filings for my 9-to-5 and my freelance work?
It's a really common question, and the answer is no, because as an individual, me with my SIN number, all the money that I'm making is going on one return. I don't have a corporation like the last person talked about. I just have me. So when I do my taxes, I have a combination of some T4s, some T4As. Like I have a lot of different stuff going on, and it's all just one tax return, and it's all due April 30th or June 15th. But as me as an individual, without being incorporated, all my stuff goes on one return. What else have we got?
we have a handful more, and I think once we're gone through this list, we can wrap up because I feel like it'll be half an hour. Sure. I don't want to tire anybody else out. So next one is, do I have to have all my receipts in order to file them as an expense, or would a bank statement be enough?
It's a good question, and the sad answer is that the CRA loves paper receipts. They just want paper receipts, and we don't have to always keep them. I mean, you don't have to have them for sure to file your taxes, but in general, your new job from today, because I'm telling you, is keep your receipts. So bank statements are okay, but people like to throw paper out, and I don't. I have a big old paper bag like this with all my receipts in it, and every year I sort it into an accordion folder and stick it in my storage locker. You have to keep your receipts for 7 years. You just have to have them. So if you don't have them and you've been claiming expenses, that's okay, because we should still be claiming these reasonable expenses. But keep your receipts, keep your paper receipts, always. Just going forward, just do it. It's a pain in the butt, but you got to do it.
Keep the receipts.
Keep your receipts.
Okay. Following question is, maybe Darrenell wants to ask this question because it doesn't make a lot of sense to me. It says, you spoke as it relates to depreciation of devices for write-offs. Darrenell, maybe you want to say that out loud, if that's okay?
Yes, thank you. You were speaking as it relates to devices like laptops or cameras or cell phones, and how they depreciate over time. And in terms of making I'm not sure how you phrase this, but in terms of making them into write-offs, I'm not sure if I phrased that properly, but how exactly do I go about doing that for filing taxes?
Are you filing your taxes by yourself? Like
Yes.
You're not using an accountant, right? Okay.
But
So
at least for no, I've not decided whether I'm using an accountant or I'm doing it by myself.
Depreciation is not something to be jumped into lightly, because there is long-term tracking that you need to do, which is why if you have a lot of depreciation, seeing an accountant is worth it. But something that I mentioned when I was talking about is if you don't know how to do it, you can call the CRA and get their help. Basically, it's complicated, Darnell, and it's a bit of a long conversation because it depends on what you bought. They have different depreciation categories, different classes, class 8, 10, 30. Like there's just so many different ways to do this. It's a longer conversation, and it's hard to do here. But the basic principle is you take your asset, depending on what it is. In the first year you buy it, you take the value, cut it in half, and take the percentage that you're allowed to write off in the year. So I bought a computer for $100, for $1,000. I reduce it to $500 in the first year I purchase it, and I'm allowed to take 55% of $500. Let's just do some math here. Calculator. So 500 times 0.55, because computers are depreciated at 55%. So in the first year I bought the computer, I would claim $275 of that $1,000. And the remainder, which is $725, I carry forward to the next year, where I claim 55% of that. And what's left, I carry forward to the next year and I claim 55% of that. So it's a long-term endeavor that requires multiple years of tracking and complicated math. So if you can find something online that can help you with those schedules, I would encourage you, if you're buying a lot of assets, to talk to an accountant. If you're using some softwares, might be able to set up to do the depreciation for you, but I don't know which ones they would be. So depreciation is not something to jump into just like, I can do it. Make sure you're doing your research, and if you can find a software that can do it for you, like if you're using TurboTax or UFile, maybe there's an option, but I don't know like that, unfortunately.
Okay, thank you, Tova.
No problem.
Alexia, do I need to continue for you?
Sure, yes. So just FYI to everybody, our last question here is from Cass, and we're going to try to wrap it up after that. So yeah.
Yeah, Philip here, there's about 10 or so more questions, and then we're good. We're done. Think you're game for that, Tova?
Yeah, I'm doing good.
Okay, cool.
Yeah.
Cool. So the next question comes from Carla, who says, are per diems considered taxable income?
It's a great question. It's a complicated question. It's not complicated. Basically, per diems are not considered taxable in Canada. However, some places will make it so that they're taxable, but they'll include them in your T-slips. So it depends on how they're paying you. If the per diem is included as income, then you get to claim the expense that you spent the per diem on. So if I got $25 a day to go do a gig in Montreal, I either claim the $25 a day and then claim the corresponding receipts of where I spent that money, or I don't claim the income and I don't claim the expense. So either you claim income and expense, or you claim neither. So just make sure if you're getting per diem, make sure that the per diem, be clear about whether it was included as income on any of your slips or not. That's all.
Great.
Cool.
The next question comes from Ruth, who says, how about flight expenses if you are searching for a studio space looking to relocate?
Yeah, it's all about the reasonable. So if you don't make a ton of money and you have a lot of flight expenses and your business looks like it's making no money, then I would not claim flight expenses. But if you are making a lot of money, if your business can support the flights, sure. If you're looking to relocate for partly personal reasons, which it sounds like you might be, then claim a portion of the flights. Don't claim them all.
Amazing. Next question comes from Mizba. What happens if your expenses exceed your income?
Yeah, it's something that we've touched upon a little bit about, like, does my business look kind of crappy? I have a lot of expenses. The CRA expects that a new business, this is a new business, will run a loss for the first couple of years. Generally, we think a business might run a loss for the first 3 years it exists. And beyond that, the CRA expects you to show some business growth and some profit. So if after 3 years we're running a bunch of losses still, you need to revisit your business model and try to figure out, do I have an expectation of profit, or am I a hobbyist? Am I being too aggressive with my expenses? You don't want to run business losses aggressively forever, because it's bad. It looks like your business is bad and leaves you vulnerable to audit, and audits are nasty. So if you are running consecutive year losses, check your business, see what's going on there. maybe you need to scale back your expenses. Sometimes running business with income actually will yield you a better refund than running a business with a loss. So it's not always the case of writing it all off and getting rid of the income. If all you have is freelance business, no other income, if you run a loss, you will get nothing back. But if you have a job, if you have a freelance income where you actually make 10 grand, you might actually get a bit of a refund, because there's a credit called the Canada Worker Benefit that is for people who are working, but not making a lot of money. And it's basically if you're making like $11,000 to $17,000, there's a credit that's worth $1,000. So if you're always running losses and always claiming zero income, you're losing the benefit of having that credit. So sometimes it's a matter of showing some profit in order to get a better refund. Just some tax strategy there.
Okay. Next question is going back to the example about the t-shirt that cost $25. What if there's a $10 shipping expense on top of that? Is that considered part of my income, or only the income from the shirt itself? Would I claim $35 in that case? Oh,
well, so if you sell the shirt for $25 and charge them $10 for shipping, then the shipping is income. This $10 shipping is income, but then the cost of the shipping is an expense. So they shouldn't zero themselves out. If you charge $10 flat to ship your t-shirt, you only spend $8 to ship it, then you get a profit of $2, then you're going to pay tax on $2. But basically, it's all about the in and the out. So if I collect the money and I'm charging them for it, I either claim that income and claim the expense. If it's income that you can track, if there's like a paper trail of that income, like if PayPal sends you, if Etsy sends you a report of your income and it includes shipping, you want to claim the income, because paper trails are important. So if there's a paper trail of that income, I mean, if you made money, you made money. I can go back to, if you've made money, you've got to claim it. But if the expense is also there, then you can write it off.
Cool.
That answers the question. That might have been sideways.
Our next question comes from Abby. They say, I'm getting grants for my film productions under my name. Are the expenses for my film productions basically counted as my own when I file my taxes? To confirm, do I still have time to put money in RRSP to lower my last year's net? What's the exact deadline to submit RRSP for last year's?
Okay, there's two different questions there. The RRSP deadline is always the end of February, or like March 1st. If you look at the calendar, we have 2 months from the end of the year to do our RRSPs. Let's just look at a quick calendar for a second. February 28th is going to be your deadline. Always the end of February. So that's just goes without saying. We have 2 weeks to get some money into an RRSP. If you're receiving grants in your name, the expenses should also be in your name. If it's for film production and the expenses are not in your name, then you would probably want to give the money to your business somehow. I don't know. That's a confusing question. Who asked it? Can they speak up?
I asked it.
Hi.
So I was basically saying, yeah, because I'm getting grants in my name. So when I file for taxes and when it asks for expenses, do I just include all the expenses that fall under my production as my own? Like, for instance, buying food for crew, transportation of the crew, paying the crew. Like, I have receipts.
Is your production company incorporated?
It's not incorporated. I've done short films.
So it's just the production company is still essentially you.
Yes.
Then the expenses are just you. So the income and the expense, it's all just you. Until you incorporate, everything that you're doing is you. Even if you have like that name of the woman who had the Etsy shop, it's still just her. So income and expenses are all just you. So you would claim the expenses. It's only if you have a production company that's been incorporated and the expenses are going through the incorporation and the income is coming to you personally that it gets complicated. But if you're getting grants as a sole proprietor, the expenses are also part of that. So even if they're part of your production company is you until you make it an arm's length arrangement, which you haven't done. So.
Okay, so those count, the expenses of my productions count as my own expenses.
Yeah.
So I'm just combining that into when I file my taxes.
Yeah.
Okay, thank you.
No problem.
Cool. So we're nearing the end, only a few more left. Next is from Ellen, who's asking, when undergoing training related to your self-employment business that isn't an official educational institution like a university, is there a limit to how much that claimed expense looks like, especially related to bootcamp training that can run many thousands of dollars?
Well, bootcamp training, like physical fitness bootcamp training?
Ellen, you might need to clarify a bit.
I'm
here.
stretching. I'm just stretching my just
Thank you. No worries. I hope you can hear me.
Hi.
Hi. So boot camps really are just like I think like a informal way of these like unofficial like schools that sort of undergo weeks of training, and then you get sort of a form of certificate that says, based on our course, you are certified to do blank. And so they're not schools in terms of the government's definition of what like a post-secondary institution is. Mm-hmm. And so there aren't actual accreditations involved, but
it's like a writing boot camp, or it's not like a
yeah, exactly. It's not physical fitness. It's like a design boot camp or like a coding boot camp or something like that. It's a skills-based training.
If you are a writer taking a writer's boot camp, it's a business expense. If you are a painter taking a writing boot camp, it's probably not. So it's all the bottom line. All these expenses, what's reasonable? What's reasonable? So you can claim that if it's reasonable to your business, and I tell my clients all the time to trust your gut. Does it feel right? If it doesn't feel right, don't do it. It's not worth it. So if this expense feels weird to you, it's probably weird. It's probably weird to the CRA. But if it feels legitimate to you as a business expense, then it's probably a business expense. But you have to trust your gut and don't do things that feel weird, because you will be haunted by the choices that you made and you're afraid of the government for the rest of your life. So just trust your gut.
Okay, thank you very much.
I take classes all the time. Like I'm in acting classes like once a week, and I am all the time. And I'm an actor, so to me it's a business expense. So they may not call it a boot camp, but it's a class.
Great. So the next question comes from Diana, who asks, can you explain the benefits of a TFSA?
TFSAs are awesome. They don't do anything for your tax. Like there's no, with the RRSP'S, it reduces your net income, and TFSAs don't do that. So there's no tax implication with TFSAs, except that any money that you make in the TFSA is tax-free. So most people would benefit from having both an RRSP and a TFSA, because why not benefit from all the different things that we have available to us to save some money? But they're different, they have different functions, and they're going to serve you differently. So I have multiple RRSPs and multiple TFSAs, and I use them for different things. For me, TFSA is long-term savings that I can get. So RRSPs, the money is locked away, and if I want to pull the money out of an RRSP, I'm going to pay tax penalty on it right away, unless I'm borrowing money from my RRSP to buy a first-time home, which is a whole different story. So RRSPs, the money is locked away, and there's a disincentive to pull money out because it's supposed to be there for your retirement. Whereas TFSA is the money I can take whenever I want with no penalty. I just don't have money in my savings account anymore. So TFSAs are great for accessible cash. The drawback of TFSAs is that we're only allowed a specific contribution amount per year. And if you overcontribute in the year, you will get taxed and penalized on that, and that can be pretty aggressive. So if you have your My Account set up, you'll have access to your TFSA contribution room. It'll be right on the home page. And so say you had $60,000 of room because you've never used your TFSA. The minute you use up that $60,000, we start from zero again, and every year we get $5,000 or $6,000. So if you were to use up all of your limit, and the next year you only have $5,000. So you can never overcontribute because they will penalize you. And it doesn't matter if you pull money out every year, it's what you put in the account. So if I put $6,000 in the year, I've used up my limit, and then I pull out $6,000 on December 31st, I still can't put money in that same day. That's a bad example. If I put $6,000 in at the beginning of the year and I pull it out in September, so I have nothing in my account, I cannot put another $6,000 in on October 1st because I've already used up my entire contribution limit in one go at the beginning of the year. If that makes sense. It may not have made sense. It has been a long shift. This has been a long conversation. Hopefully that makes sense.
Yeah, we're only just a couple more. Thank you so much.
Yeah.
The next, Jackson asks, excuse me, where can I read more about the basics of HST and how a freelancer interacts with it? Or what search terms might I want to use?
I tell everyone to go to the CRA's website because you're getting your information from the horse's mouth. Why not go to the source? And that number that I put in the chat a little while ago with the phone number, you can call them and ask them for free for help, because there's like just get the information from the people that are making the rules. Don't get information from your friend whose mom is an accountant. Don't get information from Joe Schmo on Twitter. Get the information from the place that makes the rules. It's just, I see too many people doing HST wrong because a friend told them that they did this thing. The tax broken telephone is long and treacherous.
Yeah.
So get the information from as close to the source as you can. And the CRA's website has a whole bunch of information about HST, so I would say go there.
Cool.
Yeah.
Okay. Cass asks, are the costs associated with sending your film to festivals tax deductible?
Yeah. As long as you're trying to make money from making those films, you should be able to write off the cost of getting them out there to be seen. Absolutely.
Cool. Arcana asks, any advice for self-employed gallerists working as freelance?
Advice? It's vague.
Yeah.
That's a vague one. Keep your receipts is the best, all the advice that I've given so far. File your taxes on time and keep your receipts and keep good track of your revenue. That's without more specifics, I don't have I don't know what to say other than keep good records and file your taxes.
Would the person who asked the question like to follow up before we move on? I think they're good.
All right, we're good.
So next, Sam asks or clarifies, as low income, do I file taxes, but as personal income? Wait, this question is phrased very interestingly. Sam, would you like to ask this question yourself?
Hi, I'm Sam Gedam. Sorry, English is not my first language. So before I had asked like a low income, I don't file my taxes. I missaid that. I do file my taxes, but for low, like as you said, below 20 or 24K, they just ask for my yearly income. I'm guessing that's personal income. But if I'm going into business or trying to be an artist, freelancer, is it still the same where I just give my like yearly income as a business and my expenses, or do I have to bookkeep and go in details?
You have to bookkeep. When you have a business, you have to bookkeep.
Okay, and if it's just personal, you don't have to, right?
Well, so just to be clear, when we file our taxes as sole proprietors, we're only filing a personal tax return. We file it, but there's a form on our personal tax return that is a business form.
Okay. So as freelancers, you have the option of like trying to become a business, but if you like before, like last year, you just had it as personal income, that's not illegal, right?
As long as you're reporting your income, you're probably not doing anything illegal. Like the questions are, the question's a little confusing to me right now. I mean, if I can repeat back what I think I understand, you're low income. Does that mean you have like a day job? Like you have a small job where you're making a little bit of like income from a T4? Is that?
Yeah, just like from like, it is artist related, but like selling or anything else, and like, yeah, a day job.
I'm still not entirely sure I follow, but the bottom line is you have to report your income, and income from day jobs is separate from income from freelance, but they all go on the same tax return. They just go in different parts of the tax return.
Oh, okay. That clarifies. Thank you.
Okay.
And then lastly,
yeah,
we have a question from Cass, who asks, if I have small business with sole proprietorship and I have to pay other freelancers, models, makeup artists, photographers, can I write these expenses off?
Yeah, I mean, business expenses are business expenses. If you're a photographer and you have to hire a makeup artist, and you couldn't do your shoot without it, then it's an expense.
Great. And with that, I think we're about finished with the Q&A period, and it is officially 4:59 p.m.
All right.
Yay. Thank you so much, Tova. This was super helpful.
My
You were
pleasure.
incredible.
I hope that, I mean, it's long. It's a lot of tax information that went on there. Thank you all for your patience, and thank you to XSpace for having me. It was a real pleasure to prattle on uninterrupted for 3 hours.
I received quite a few questions asking about recording. So just to clarify, we will be sending out a recording of this through email. So you should be receiving that within the next couple of days. If you want to have access to the text chat, just email Nat. Yeah, thanks so much for taking the time and energy, Tova, to explain everything to us. And thank you to everybody who participated and engaged.
And good luck to everybody filing your taxes.
Yeah.
We got this.
You got it. Everyone's got it now. You're gonna be
Okay, great. Thanks, everyone. Have a good night.
everyone. Thanks.
Thank you.